Second one is about relief given in working capital facilities. Now, as far as working capital facilities is concerned, the relief is restricted to the extent of deferment of recovery of interest, which is applied to the working capital finance facilities during the period of 1st March to 31st May. It means that March, April, May, the 3 months interest will become due on 1st June once this moratorium period gets over. And because of this, out of order status will get impacted to certain extent, which we'll discuss in the subsequent slide. Now, as far as working capital facilities is concerned, it will not include LCBD by any reason. So it's only purely working capital facilities, or just to put it in normal words, it will be only CCOD facilities per se, where the interest will get deferred. Besides interest, there is no other benefit which has been really given. So rest of the things remain constant. No relaxation is given in NPA norms, even over here. Now, the third relief is related to relaxation in margins related to working capital finance. Now, here RBI has given a discretion to the lending institution during the period up to 31st May. So, during this intervening period of 3 months, the bank can give relaxation in two forms. One is by way of reduction in margin. So, suppose you are having a present margin of say 25 and 40%, bank can reduce that margin. Reduction of margin to what extent is not specified by RBI, so that is left to the discretion of the bank. So bank need to have a formulated policy for this particular factor. Secondly, as far as reassessment of working capital cycle is concerned, it's only a specific mention which is done by RBI. It doesn't talk about to what extent the reassessment of working capital cycle has to be made by respective banks. So as far as auditors are concerned, as an auditor, you need to ask the bank about COVID-19 regulatory package board policy or the bank's board approved policy. And based on that, the credit call will be taken by individual banks. Now, the third part is about classification of accounts between special mention account and non-performing asset. Now, as far as relaxation in SMA or NPA norms is concerned, there is absolutely no relaxation which is given in the circular. The relaxation is restricted only to the extent of relaxation, wherein suppose there are two parts in the relaxation. First one is that the 3 months moratorium or extension which is granted, that will not be considered as restructuring. So in that case, there will be no downgrading which is required because of this moratorium. Second part is that what RBI specified is that because of non-payment of any dues which are falling between 1st March to 31st May, no assets should be considered in additional SMA category, in the sense downgrading in SMA category or downgrading in NPA. It doesn't talk anything about whatever is due up to 29th February. So there is no relaxation as such which has been granted by Reserve Bank of India. Normal 90 days norms practically remain same. Now there are a few questions which have remained unanswered, and for which we need to practically refer to the bank's individual circulars. First thing is that the circular is silent about whether it is applicable only to the borrowers which are affected by COVID-19. In reality, one can always argue that irrespective of type of business, COVID-19 is affecting the working capital cycle. So that is something which will be difficult to argue otherwise. Second one is that the circular, whether it will be applicable to the all borrowers or whether it will be applicable only to the borrowers which are opting to avail this benefit, is also something which is silent in RBI circular. Different banks are interpreting and implementing in a different way. There are few banks which have made it applicable across the board. There are few banks which have given option to the borrowers. So it depends upon the bank's individual policy. Second point is that it will require, or rather it will warrant certain kind of documentation for legal compliance purpose. So that is something which has to be legally vetted by individual banks. As an auditor, we did not really venture into that, but at the same time, we can always be asking for clarification as to whether the bank has taken any legal view as far as documentation requirements are concerned. Third point is that because of extension of repayment schedule, what RBI specified is to the extent of moratorium period, only the tenure will get extended. So what it indirectly means is the interest which will be applicable to these account holders for that 3 months moratorium period, to that extent, that portion will get absorbed in subsequent EMIs. So natural fallout will be the EMIs will be required to undergo change on a higher side. And because of that, that there will be practical difficulties as far as ECS instructions are concerned, standing instructions are concerned. And parallelly, there will be documentation issues because of this particular factor. And fourth and last factor is that as far as the relaxation of working capital drawing power calculation is concerned, RBI is silent about that, and it appears that the discretion is given to the bankers. As far as banks are concerned, whether just to give an example, whether the book date should be considered up to 120 days, 180 days, 365 days, or 3 years, or whatever it is, uh, RBI is silent about that. So what I expect is that the banker should be taking a logical and prudent view about that. But that is something which is always a subjective and debatable thing. So that is another question which has remained unanswered. Just one communication which I wanted to display before all of you is that there is a communication from Reserve Bank of India to IBA, which is dated 31st March 2020. It was in the response to the query which was raised by IBA to RBI about the relaxation of NPA norms because of COVID-19. And RBI is very clear and straight in responding to that there is no you can say a relaxation which is given to any amount which is falling due before 29th or up to 29th February. So just as a corollary of that, what I mean to say is, as far as any installment which is due up to 29th February, the counting of overdue period will start therefrom. Moratorium period also will be included in that counting. And just to give a technical input, as far as term loans are concerned, if any term loan installment which was due up to 1st January, it means including 1st January is due and it is not paid by the borrower till 31st March, the account will be straight away going into NPA category because 90 days are getting over. Let me just touch upon the last point about a few case laws which are getting circulated across many WhatsApp groups and on various forums. As far as both the case laws are concerned, both are case specific. They are only restricted or rather limited to the extent of those banks and borrowers. So if you happen to do that particular bank and happen to verify that particular borrower's account, naturally you can take a reference or clue from that particular case law. In both the case laws, nowhere the RBI circular is interpreted or nowhere the RBI circular has been interpreted in a manner wherein NPA extension is given across the board. So the courts are also very clear about that particular verdict. And that's why, just to conclude, actually, COVID-19 package is restricted only to the extent of extension of installments for term loan for a period of 3 months, that is from 1st March to 31st May. And as far as working capital is concerned, it's only giving a deferment of interest payment to the extent of interest which is getting debited between 1st March to 31st May. So that's all about COVID-19. And over to Niranjan now.
Thanks, Dhananjay. Uh, Thanks to Nitinji and his team for giving this opportunity, actually. Um, we wanted to talk together a long time, and answering questions from members is always a pleasure. Very good morning to all the participants. Obviously, a lot of eminent members would be present because I was told that your study circle is one of the very famous study circles for quality work. I would be taking you through some of the important provisions which have come with respect to restructuring of MSME accounts. Since you all are aware, the guidance note on 2020 is already on, and it is available for free download. So members may take the use of it and download it for their benefit. A lot of RBI circulars are posted on the website of RBI. One can go through around close to 276 RBI circulars, which would be certainly of a great help to understand what new things have come during this particular financial year, that is April, from April 1st to 31st March. More importantly, one restructuring circular which has come, which is on 11th of February. So one has to go through that. Another circular, I think Dhananjay has just explained about COVID-19 regulatory measures from 27th March 2020 circular. Those who are young members who are not so aware with how to look at RBI circulars, I think they can just have a look at this index to RBI circulars. On the right hand side, you will find the years, and you can go back till 2011 in the first list, and you can go up to I think year 2000 in the archives as well. So one should be easily getting the link of RBI circulars, having at least a basic knowledge about what kind of circular is applicable to a particular area of our audit. I think one can go through this. 1st July 2015 is the last master circular on IRAC norms, which talks about restructuring. The definition in that circular talks about restructuring is where the borrowers, for economic or other legal reasons relating to borrowers' financial difficulty, a bank grants any concession to the bank Generally, this concession would be in terms of reduction in rate of interest or reduction in EMI, extension of repayment schedule, etc. However, certain exceptions to this particular application would be MSME accounts. First, January 19 was the first circular in the series. The same scheme has been extended with some modifications up to December 2020. Accounts covered by natural calamity, I think 2018 circular. Project loans obviously would be dependent on the date of completion of commercial operations. Accounts as covered by COVID-19 circular explained by Dhananjay and take out finance. So MSME practically would be the one which is governed by a new circular. All other accounts would be governed by this 1st July 2015 circular, which says that the standard asset would get reclassified as substandard immediately. So a downgrade on the restructure is a must. Most importantly, it should be the first restructure. Repeated restructures won't be getting the benefit of this scheme. The account which is already an NPA would be considered to having same asset classification. Just this point, wanted to make clear that most of the branch auditors feel that an account which is already an NPA cannot be restructured. So just to take a clue from this master circular, we can look at certain requirements, and the requirement is that account should not be a loss asset. So if account is up to D3 category, still it can be restructured. Additional finance given to such restructured account will not be downgraded for a period of 1 year. So the co-borrower concept will not be applicable in case account has been restructured. All such restructured accounts classified as NPA on restructuring would be eligible for an upgrade. They have to observe satisfactory performance during the specified period, and the satisfactory performance is not overdue for more than 90 days at the end of the specified period of 1 year. That is being prescribed in Annexure 5, point number 8 of the Master Circular. Coming to this 11 February 2020 circular, I think the relief has been given to MSME borrowers for one-time relaxation in restructuring of advances without downgrading the accounts from standard to substandard. This is in continuation with the earlier circular issued by RBI dated 1st January 2019. Now, this one-time relaxation is given in the downgrades. So, if you look at the 1st July 2015 circular, an account on restructure has to be downgraded if it is a standard account. But in case of MSMEs, the account will remain standard. So that is a big advantage given to this MSME borrowers. Total 8 points of this circular we should look into for compliance of these. This MSME sector restructuring would require an aggregate exposure to be verified, including fund-based and non-fund-based limits, as on 1st of January 2020. And the limit prescribed is 25 crores. So the total exposure of the borrower should not exceed 25 crores. Now here the exposure is something which we have to look into. Exposure need not mean only outstanding. It means outstanding or limit sanction, whichever is higher. So one has to look at that it doesn't go beyond 25 crores. Further, multiple banking accounts, if they are having an exposure in a branch where you visit, your job to verify whether the details are being properly captured through either the due diligence report or through internal communication between all other bankers. But make sure that this 25 crores limit is being adhered to by the banks. A borrower account should be a standard asset as on 1st January 2020 until the time of implementation, till the date of implementation of this restructuring scheme. If you go through the 1st January 19 circular, the same condition is also there. It's prescribed that it should be on 1st January 19 as a standard asset, and it should be implemented for a period of 12 months, for a period of 15 months up to 31st March. So I think the same point has been extended for another period of 9 months with a revised condition that account should be standard as on 1st January 2020. The borrower entity should be registered under GST, except for those who are not eligible or not required to be registered under GST. This is also a similar point considered from 1st January 19 circular. So that is another requirement as an auditor we should look into. Restructuring of borrower accounts to be implemented on or before 31st December. This is an extension to the earlier scheme. Earlier scheme was applicable for restructuring up to 31st March 2020. So this 11 February circular has extended this scheme for another period of 9 months from April 1, 2020 to December 31, 2020. At present, we don't look at any eligibility criteria defined, but primarily since this is in continuation with January 19 circular, exactly the same scheme could be continued. Fifth point talks about accounts restructured prior to January 19 are ineligible. Obviously, restructuring, if it is done as per the original scheme of 1st January 19 circular, another restructuring is not permitted because the benefit of restructuring primarily can be given for a one-time restructuring. Additional provision will have to be attracted for 5%, and that has to be done. Similarly, an additional disclosure is also required to be made in case of financial statements under Schedule 18, Notes to Accounts. In case of accounts which are restructured and they subsequently fall in NPA category, post restructuring, usual NPA norms would be applicable. In case of restructured account, if it is downgraded as NPA, then they would be eligible for upgradation. Like in case of normal restructured accounts as per 1st July 2015 circular, an account can be restructured and it is downgraded to NPA, then upgrade condition would be satisfactory performance in specified period. Satisfactory performance is 90 days overdue, less than 90 days overdue. But in case of MSME, little stringent condition has been applied. The condition would be they would be eligible for upgrade provided it is less than 30 days overdue. I think that's what is the new circular. And as an auditor, especially the statutory branch auditors, we would get to look into a lot of MSME accounts. And if they are restructured with effect of these two circulars, first January 19 and 11 February 2020, then we may have to additionally plan for testing of restructure and compliance with terms and conditions. Thank you. Over to you, Lokesh ji now.
Before Lokesh, you start, I just want to welcome MM Khanna ji. He's very, everybody knows he's a very senior chartered accountant and former settled council member. And apart from this, he's a learning wizard and a learning wizard on Bank Audit. Everybody look up to him. When you talk about Bank Audit, the first word came to everybody's mind is MM Khanna ji. So thanks a lot, sir, for joining us as a panelist. And wherever you feel like you want to share some experiences during the whole seminar, I personally request you to please be a part of it. Thanks a lot, sir.
Thank you. You know, it's a privilege for me to join in. But you have such excellent panelists today, such excellent people. I joined to, for the purpose of learning more than speaking, because, their knowledge, expertise, and experience, I've, seen them and I have, they have, I know how they have exposed their experience to me. I was really amazed. And I'm very, very happy for you that you have such excellent panelists with you today. But for me, it's a privilege to join in. And I'll try and chip in whatever I can within my experience, limited experience, or whatever I have in the audit of banks. And I'll certainly try and do my best. Okay.
Thank you.
Thank you, Kanaji, for being here. Now, I thought that there is a lot of controversy sometimes we have seen when we do agriculture advances. Personally, what I've seen basically is that a lot of times when we are able to identify NPAs, the bank comes back to us, tells us this is, of course, the repayment has not happened within the timeline. But the biggest problem with that is that there was an issue of natural calamities in the area, due to which we have restructured the account, and the account being restructured under natural calamities would not require a classification as a NPA. So I thought there is a lot of confusion or understanding issues as to the fact of what is the concept of restructuring under natural calamities. And as Niranjan ji before me have explained to you, restructuring under natural calamities, of course, is one of the exceptions of the basic rule of restructuring, that the account on restructuring slips into NPA category if it is standard. So that is not applicable in case you comply with the guidelines given for restructuring under national calamities. So let us, from my side, I'll try and make you understand what are the points of natural calamities, how it is to be decided whether the restructuring has happened at natural calamities, what are the prerequisite before the benefit of same asset classification can be done under the concept of natural calamities. Uh, uh, Niranjan, if you can share the slides, or should I share? Okay, I'll share. Okay. Now, when we refer to the concept of restructuring under natural calamities, please everybody note down this circular which came on July 3, 2017, which is the most important circular for this. This is basically a master direction on relief by banks in areas affected by natural calamities. So wherever you are allowing a benefit of the natural calamities and the restructuring done under it, you should be aware of these guidelines. You should have this circular in your notice. Now, what the circular basically says is, they say that these are the 12 natural calamities which are basically covered under the concept of natural calamities. So they have specifically mentioned the natural calamities which are there, and you should be able to see that these are the only 12 natural calamities which they have covered in the circular, right? Okay. Now, the first question which arises in our mind is, who would declare that there has been a natural calamity? Whether the bank can declare that there has been a natural calamity? No. As per the circular, it is very clear that the declaration of natural calamity is within the right of the government. That may be the central government or the state government, and they issue different kind of basically notices for it. It may be called as Annavari, Pesavari, or Girdavi under different areas. But basically, you need to remember that the declaration of natural calamity has to be done from the side of the government only. Now, the second question which would arise would be basically that in case the government has declared a natural calamity, whether the area for which you are doing the audit is covered by that natural calamity. And in case it is covered, what was the kind of loss which the area suffered due to the natural calamity? So for that, very important that we'll have to refer to the state level bankers committee circular on this. In case the full state has been affected by the natural calamity, or if only a part of the state was affected by the natural calamity, then the district consultative committee would issue a circular stating that the areas which suffered the natural calamity and what was the kind of loss which the area suffered due to the occurrence of the natural calamity. And there is also a natural calamity portal which is live from the side of the RBI from 20th July 2017. So we can also refer to that the portal for the purpose of basically checking on any such circulars also. Now, the basic conditions which are required to be fulfilled in case we want to claim the benefit of natural calamity is that there should be a crop loss, and the crop loss which should have been there should be more than 33%, at least 33% or more. If the crop loss is less than 33%, then the restructuring, of course, can be done by the bank. We cannot deny the right of the bank to do a restructuring, but the benefit of restructuring under natural calamity would not be available to them. This, of course, because sometimes when we do an audit, they tell us that natural calamity occurred, say, 2 years back or 3 years back. This 33% was 50% before. Up to 20th August 2015, it was 50% or more. On 21st August 2015, the circular came, and this concept of crop loss, which is there, has been reduced from 50% to 33%. So that we need to keep in mind. And second, very important, and again, what we have found practically is that they sometimes bank claim to have done a restructuring, and they want us to give that benefit to the bank in terms of not classifying the account as an NPA. But we don't see that any restructuring has been done practically. So there is no change in the repayment period, there is no change in the due date, there is no agreement, there is no document which is available with the bank to show that there has been a natural calamity. Why it is important? Because the circular says that the restructuring should be completed within a period of 3 months, unless the period is extended by the Reserve Bank of India on an application by the banks there. So what restructuring would basically mean, that there should be some positive action from the side of the bank. Just claiming that a restructuring has been done without any action from the bank side cannot be considered as a restructuring. There should be some positive action in changing the due dates, in doing some kind of an agreement between the bank and the borrower, some kind of a letter, some kind of a order from the bank side that they have done the restructuring of each account. Something of that sort should be shown to the auditors to satisfy themselves that the restructuring has actually been done by the bank. Okay. Now, what would happen in case the restructuring is been done? The basic conditions are taken care of. So there are two types of basically elements in a agriculture loan. One is the short-term production loan, which is basically given for the crops basically, and there would be a long-term component which would basically be given for the say for buying say some handset, some tractor, some motor set. So basically for creation of some kind of fixed assets. For the short term loans, for the crop loans, basically, the very important point is what the circular says is the account should not be overdue at the time of occurrence of the natural calamity. Now, this is a very important point, sir. The word here is overdue and not NPA. So, any account which was overdue, which was not paid by the due date has already gone and the payment was not made, so the account becomes overdue. Then in that case, in on the date of the natural calamity, if the account was overdue already, then the benefit of this interest subvention of the circular of natural calamity cannot be passed on to the borrower in such a case. What we can do is, for cases which are not overdue or the portion of the loan which is not overdue, what the circular allows is that whatever was the principal plus the interest due for repayment in that year of natural calamity may be converted into term loan, and no additional security would be required to be given by the borrower for the purpose of this loan. And what this term loan, if the crop loss is between 33% to 50%, this term loan may be given a repayment period of 2 years, including a moratorium of 1 year. And if the crop loss is more than 50%, then a repayment period of 5 years may be given, including a moratorium of 1 year. So this is the benefit which you can pass on to the borrower. In case of the long-term loans, the long-term component of the loan, if the productive assets are not damaged, only there is a crop loss, then we can reschedule installment in the year of calamity and extend period by 1 year, and interest may also be deferred. So basically the benefit you are giving is basically for a 1 year period. But in case the productive assets are partially or totally damaged, of course, then it would require a longer period. So you can the banks can give a period up to 5 years for repayment of the loan, and they can generally give a period up to 5 years, and in exceptional cases they can even go beyond that period also. And basically what it means is, as far as asset classification norms is concerned, that the restructured portion of the loan may be treated as current dues and not NPAs. Asset classification then, as per the revised terms and condition, however higher provisions may be required as per the master circular on the IRAC norms. And the remaining amount due will be governed by the original terms and conditions. Whatever portion of the loan has been restructured, that would be considered as a current due and would not be classified as an NPA. And it then thereafter it would be taken care by as per the revised terms and condition. Any amount which is not restructured would be governed by the original terms and conditions only. Any additional finance which may have been given to the customer would be considered as a standard asset, and whatever terms and conditions have been applied to that loan would be considered for the purpose of checking on the asset classification notes. Also, please remember, in case of restructuring under natural calamity, suppose there was a natural calamity, the account was restructured, and before the account becomes due for payment, there was another natural calamity in the same area, then the account is allowed to be restructured the second time also, and because of natural calamity, and still the benefit of the asset classification can be continued. So repeated restructuring per se is not applicable in case of restructuring under natural calamities, and any insurance proceeds which are received can be adjusted against the restructured accounts. And we can sanction fresh loans also, fresh crop loans. We can sanction long-term loans for repair of existing economic assets. Consumption loans can be given up to 10,000. And basically the loan should not be denied for lack of security or margin requirements, and no penalty interest can be charged. Also, no compounding of interest is allowed under the this guidelines. And basically we can also relax the KYC guidelines in terms of, because there may be a loss of the KYC documents. So we can open small accounts based upon the photographs and the signatures of the customers without requiring any detailed KYC guidelines to be fulfilled in this case. So these are basically the guidelines. What we need to remember is the crop loss, and we need to remember the overdue status of the account as on the date of the natural calamity, so that we are able to provide the benefit in the right cases, and wherever the circular does not cover the cases, we are able to take the appropriate call in such cases. Thank you so much. Now over to Kuntalji for his deliberation on the CBS part.
Thank you, Lokesh ji. I've been assigned to speak on to the CBS. There are various issues into the CBS which requires in-depth review into the CBS. Rather, what we have been fed with is like this way, that once you get a report from CBS, that is perfectly in order, and we need to accept that report in toto. However, that's not the case. I will be sharing few of the case studies as well. Since yesterday, there is one more WhatsApp that is floating around, that is IB has returned to Reserve Bank of India to curtail the number of branches for audit under in garb of this COVID-19 case, though the authenticity is still not confirmed. However, there have been various, and one of the aspect into that is mentioned is that everything is available in CBS. I have my reservations onto it. Yesterday we had a discussion that yes, a lot of members have issues, observed issues, and a lot of reservations with CBS. However, members have been told that no, the CBS is working perfectly fine. The NP identification is perfectly fine. However, let's see few of the issues that might be there into the CBS, or few of the issues, a few of the cases which I have observed during my auditing experience. And then we'll open the Q&A session. I'm starting my presentation. First of all, let's discuss onto this aspect. There are various parameters which are affecting NP identification. One of the most important one and most dicey point into the NP identification is that everyone is told that system is identifying, system is marking, but in fact, what I have observed, it's not the case. There have been various divergences that have been observed. Even I'll show you a few of the menu codes wherein you can see the various bifurcation into the system determined asset classification as well as user defined asset classification. Predominantly, actually, the ideal system is like this way, that system will be identifying the account as NP and system will be marking the same as NP as well. However, the things are not that rosy that how the system should be. Things have happened in or the setups have happened in that way that there are two set of classifications in many of the system, wherein the system will be identifying the account as NPA, whereas the marking side is the authority of marking the account as NPA is with the user, either directly touching upon those things or through a script that is run through at the end of the day. There have been instances wherein it has been observed that banks are using one of the script to exclude set of accounts or few accounts out of this NPA parameterization. Those have been these aspects have been categorically reported under RBI audits as well in few of the banks, and these are all very serious of nature. In this scenario, what I would like to say that the feature available in CBS is required to be reviewed thoroughly. There are in few of the banks, there are reports available wherein there are difference between the system determined asset classification and user defined asset classification into both the predominant system, that is TCS banks and Finacle. However, the major challenge is not posed by the system but by the auditee. Many of the times we do not get access to set of reports or certain kind of thing, or we don't have even a laundry list of the reports that are there. For that, we need to at least work onto the system. Again, these are all parameterization done individually into the banks. Hence, there is no generic command that is available. However, in Finacle, there is one of the command which can be used to check is there any difference between the two. The command is ACI, account information inquiry, that is account master inquiry. and into that you can go to why and for asset classification inquiry. However, again there is an issue that shows the live information, that is you cannot have an history through that. And since we'd be working now under the COVID up to 3rd of May, there is a complete lockdown. That is what is suggested recently. Now that the situation will be on the live case only, and we cannot go back to 31st of March. However, we need to seek certain set of report, or at least we need to understand from bank that that system that is deployed, if possible, obtain it in a writing form or some operational guideline form, or whichever way it's feasible. However, before relying 100% onto the system, please understand that system is also made up by the user or the human being only, and that's everything is possible into the system. I'll show you few of the thing, and probably that will open a lot of members' eyes as well, that how the report or the system is also, though properly set up, there are ways and means to do it, how to circumvent the system logic. This is the first one, manipulation in sanction limit and drawing power. There have been various instances observed wherein the account was in continuously in overdrawal in excess of limit. It was about 89th day, 88th day, 89th day, assuming that the limit was of 1 lakh rupees and the account was in debit balance of, let's say, maximum debit is 1,15,000 rupees. Now what happens is, out of a blue moon, something comes up into the account and the limit is got increased to 1,25,000 rupees. Now the moment limit is increased to 1,25,000 rupees, the balance is now within the limit. Now, so instead of reviewing those things that what's there into the balance side, we have got now an increase in the limit itself. Now, once you say that it is within the limit, their entire computation of the overdue period or the out of order status will go for a toss, and it will once again start with a day one the moment it crosses 125. However, after a few days, we have observed that in such cases the limit is brought down to 1 lakh rupees, and again the entire computation of out of order starts. Now such kind of things are very easy into the system, because there are decentralized processes available. In certain cases where there are centralized process, it becomes more difficult. However, these cannot be ruled out. I don't want to say that all the banks, all the branches, or for all the accounts these things are happening. My only concern is this, that when we find this kind of thing, at least have a detailed scrutiny of such kind of thing, whether any change in the limit is supported by necessary document or not. In Finacle, you can get a history of these changes, but only shortfall is this, that it is only an account specific menu option. You can use ACL HM command, account limit history maintenance, and within which you can find history of entire changes. In case of TCS banks, you can get this one as a report there on a daily basis. The push reports, that is the reports which are stored into the network folder, will contain changes in the limit report as well. However, if it is not available, we need to first seek information from branches or from the central statutory auditor. The second case that we many a time we find that the system is circumvented through fictitious credit through office account or inter-branch account. This is very common. Office accounts have been misused during demonetization activity as well. The auditing after post to demonetization had this observation across the board. The issue lies is like this way, that let's assume that there is a suspense debit suspense account. The amount is debited into that account and got a credit into the operative account, that is CC or an OD account. The account was not having sufficient credit to match up to the debit during the same period. Now in that scenario, the account will become out of order and then the NPA. That is what the IRA guideline says. However, to ensure that accounts do not get identified through this one, there will be an inflated credits, or there will be an fictitious credit into these accounts by the use of office account. The entries are generally reversed on the same day or after some 2 or 3 days with a narration that erroneous entry reversed. Now, when we see this, we find that it is an erroneous entry and we can ignore that part. However, it might be an intentional, it might be an unintentional as well. Now, as an auditor, it becomes extremely important for us to review such kind of thing, that how the things are moving around into these cases. If you say that everything is available remotely and everything, now in this case, you can you check that whether these were genuine or not? Because probably many of the time you need to refer the vouchers. Still, many of the banks do have physical vouchers and documents maintained at their end, and all the banks may not have all soft copy of these documents. So please, we need to review the checking of the source of the credit entries. Now it becomes very important, and we need to now start working more on through the system rather than working through the reports. Now, few of the members have told me during my sessions that, sir, we can use ATOR command. Now, I'll just give a brief of this. ATOR is an account turnover report wherein you get a debit and the credit turnover. However, that report is also not reliable. Reason being, if you have a fictitious credit, that report, now let's say in this case only, then this report will have aggregate of this fictitious credit as well into the account. Now, these are the issues that are actually taking system for a ride, and systems are many of the times are correctly parameterized. However, the users are creating problem. In certain cases, system itself is faulty, or in certain cases, system is parameterized in such a way that without the user intervention, the system won't be functioning properly. Now, there are plenty of the things. We sadly, we have very less auditing into the application or a validation check side, and there are nothing is there. The Ministry of Finance guideline and the RBI guideline categorically says that identification should be through CBS, but nobody has ever validated what's there into the system. Now that's where the entire issue lies. Let's check one more thing: round tripping from internal account. This is also very common. Now, assuming that Mr. A is having a current account, Mr. B and C they are having a CC or an OD account with a low credit turnover. Mr. A's account is a current account, got debited with 10 lakh of rupees, got a credit to B account and B to C and C to A. Now, in that scenario, Mr. A won't be complaining because he got his fund back. He'll be presuming that the bank might have erroneously debited the amount and they have recredited the back. However, into this entire activity, B and C got a credit, and this is happening. That it's not that we are just talking about something which is a imaginary part. This is happening. Now, the point is this: that when we deal with such kind of thing, we have a lot of accounts to be reviewed. How to select sample, from where to select sample, that itself becomes an important point. I always say into all my sessions that we need to recalibrate our audit strategies, without which it's not feasible to carry out under this stress or this environment or this CBS where everyone is on the one side and the auditors are on the other. We need to identify, I don't want to say that we need to do an forensic audit out of it, but situations are currently in such a way that it demands certain additional review processes to be carried out. Now let's take few case study and then what the question and answers session. I think 25 questions have been received. I'll be playing the PPT of those questions one by one, and the panelists will be sharing their views onto it. Now see this case. That's a classic case. M Private Limited was having the current account. As on 31st of March, this balance was 998,754. The background of the case was like this way: that there was a running TOD that of rupees 10 lakh was granted for a period of 16th of March to 22nd of March. It was not regularized till date, that is till 31st of March. Now, what happened was, if the moment the TOD was granted to M Private Limited in current account, he got that account got a debit of 10 lakh of rupees and got a credit to the borrower's account. Now, borrower was somehow related to M Private Limited. Now, borrower's account was almost on 89th day or overdue, and immediately that borrower account got a credit. Now, with 10 lakh, the M Private Limited account was in debit balance. Now, we saw this case particularly with respect to 31st December, that is previous year, and on the June as well. So every time it was like a new account used to come up with a TOD. So it was like teaming and lending method, and new facilities were getting sanctioned for repayment of earlier other loan facility. So this is how it was very simple transaction that was there. It was a common transaction that was done. So you can't, at least even as an auditor, it becomes very difficult to review such kind of thing. My only request and sincere request is that whenever you find credit into the account wherein there are very less number of transactions, both debit and credit, or where the account is scaled used in a very less in number of transaction or something, please review the credit source. Also see to it from where the credit originated, and also see that in that account from where the credit came up. It may sound very harsh, it may sound that we are going way beyond our activity, but that's what we felt, because in certain cases we are finding it very difficult to defend ourselves when we find such kind of credits. I'll show you one more case, and then you will find that why it is required. Now let's see this case. Now this was a classic case of a transfer from a current account to a CC account. From 9 crore, they got a turnover of 39 crore only in one screen. There were 3 more screens for such kind of transactions. Now, if such kind of things are happening, that CC account system will not be identifying this account as NPA, right? Because there is an enough credit. If you only rely on to ATOR report, it will show you 39 crore of credit turnover. Now in that scenario, the thing is like this way, that you will feel that no, this account is excellently used and it's not necessary that we need to go through this account ledger. So please don't desist with your practice of reviewing account ledger. We used to do it earlier as well, where there used to be a manual ledger and we used to scan through those all the entries. Now in this era, we have a system, we can do it fast. So in any case, we should not be dispensing with such kind of activity. Rather, we should be recalibrating it that way, that from where it is getting this one and originated, and the transactions are happening. Now, this is the classic case when we find probably a lot of members would be facing this kind of issue. Just understand this table. Now, this table is in probably the outcome after 1.5 days entire exercise. The case was like this way, that there were 3 CC accounts which were not regularly used. Almost on all the accounts were overdrawn, and on 31st of March, all these 3 accounts were going to be NPA. Now, what happened was these accounts got a sudden credit on 30th of March as a cash. Now, as long as we find cash, we find that probably branch manager might have pushed for recovery, and they might have arranged from somewhere, and we might find that yes, there are issues with the MSMEs and a lot of this one, and they might have deposited. And many of the time, as an auditor also, we feel that it's okay, we can very well allow that kind of thing, since at least the cash has come in. However, in this case, there was one trigger wherein the branch auditor reported, held up the report and stated that there are certain things which are not in proper perspective into these accounts. However, the auditor did not say anything in detail. Then the matter, when it came up to us, we started reviewing it. Even on the face of it, we did not find anything that are any issue into it. We hadn't had any document in our hand. The auditor also did not say anything, and we were almost about to finalize that no, there is nothing into it. He might have arranged cash from somewhere. However, when we verified in deep, we found that there were the cash were deposited on 5/14. The branch closing time was 4 o'clock. We can very well presume that on 30th or 31st of March, they do operate for longer hours, because if there are some recovery, they try and do that. That's fair enough, that's feasible. The problem started when we started looking into it, that the cash got closed at 5:01. The entire balance was transferred to the main cash account, and thereafter, after 13 minutes, the transaction started flowing in. Now that actually started some kind of suggestion that there is something going wrong into it. When we started verifying it, probably we thought that 48 would have also been deposited into the main cash. But then we found that at 5:27, there were 2 current accounts. They were ready with the check of the same amount, that is 48 lakhs, for the cash withdrawal. What happened was, probably we thought there will be a current account withdrawal would be there, because in many of the remote locations, that many of the time happens that branch do not have sufficient cash. So they may say that you come after some time, once we get some deposit, we'll pay you off. But however, when we went into the current account, and we found that there was no enough balance available, and these accounts are in debit balance. So when we again went into the TOD report, we found that both the current account got a TOD of 24 lakh and 25 lakh. Now, that was a clear case that bank's facility, a bank had sanctioned a new facility. They shown it as a withdrawal of cash, and then they used that amount as a deposit of cash. It was a classic case used where a Taylor account is used. Now, can you have a satisfaction onto the system where you find such kind of thing? Users systems, because in this system, this system has not classified this account as NPA, and into that particular bank, the system was pretty much settled one, and the system used to identify all the accounts as NPA. Even our in random verification, we have found that. But because of these cases, the system did not identify these 3 accounts as NPA. However, as an auditor, we had to give an MOC for such kind of thing. So my point is this only, that that we as an auditor are also required to be skeptical about this, and that's where I think misuse or incorrect use of CBS comes into picture. And hence I request all the participants that whenever you do auditing, please review from different perspective as well. Nitinji?
Thanks a lot to Kuntal. Before starting, I will want to thank to Dhananjay, Niranjan, Lokesh, then Kuntal. I've already received around 30 odd questions, which we are already given it to the panelists so that they can refine it. What I will do, I will start.
I have what I was doing is, when Dhananjay and they were speaking, I made a PPT of those questions. I'll display it on the screen. It will be visible to everyone, so that they can, whenever they the panelists answer, they can also relate to that. Right?
Right.
Okay, wait a minute. I'll just start.
Sure.
Yeah. There are around 26 questions, but one was a repeat one, so I have removed that one. The first question is DP related. While calculating DP, whether the advance received from customer and advance paid to supplier be considered, or is not required to be considered. Yeah, Dhananjay?
Yeah, in DP calculation, advance received from customer and advance paid to supplier both should be considered, and it will be rated at par with book debts and creditors. And a similar diligence has to be carried out by bankers as well as auditors as to verify the age of that advance paid, especially advance paid to the supplier.
Anything additional to be added to any of the panelists? Okay. Niranjan, there is a question on NFRA and bank audit, whether NFRA is applicable to bank audit, and you can, if you can.
NFRA is applicable to bank audit, not excluded. Now the question ideally is whether it's applicable to bank branch auditors, and now that is a question which is not easy to answer. But to my mind, since this bottom-up approach we have in public sector banks as branch auditors, and SA 299 and SF 600, I think we have to be prepared. If we are doing it for our peer review, if we are doing it for a kind of quality review, I think we should be ready for NAFRA also. But at present, I think the central auditors are preparing their files for NAFRA. Branch auditors, but yes, at present the question is bank audit, so let us say yes.
Okay, just one thing I want to ask you: what about the external confirmation? How can we go for external confirmation during doing bank branch audit? Whether we are supposed to do, we have ample time to do that, since we normally do it for the company law. Whether we are supposed to do in bank audit also.
I mean, that is an audit process, obviously. So one has to plan it in the plan stage. The moment you reach the branch, you can start issuing letters. I mean, there is no harm in accepting it, like whatever you wish to get confirmations for. But typically in advances, banks have a practice to obtain a balance confirmation once in 3 years, once the documents get old. There are certain practices, you can still do it. Nobody stops you from doing it. Coming for time, I have my reservations on understanding what is the time required for audit. Obviously, at the time of, accepting this assignment, one has to look at it and appropriately put it into audit engagement letter, so that, our approach of how we are expected to do audit, what is our understanding of doing audit, is made very categorically clear to the branch on day one. So I think we can go according to that. But yes, nobody stops you from doing it. It's a good practice. You can very well do it for confirmation of balances which are third party outstanding for a longer time. But yes, again, how much you can derive out of it as a conclusion, depends on how effectively the branch takes up interest in supporting your initiative.
Thanks.
Yeah, Nitinji, you can.
Loan against FD to be declared as NPA in case borrower declared as NPA. Shall I repeat it again?
Yeah, Lokesh.
Yeah, I think when it comes to loan against FD, though the IREC norms specifically mentions that in case of a loan against FD, the account cannot be classified as an NPA till adequate margin is available. So in that case, I feel that if say they have a CC account and they also have a loan against FD, then the adequate margin is available in case of the FD account, and the account should not be treated as an NPA, and we should not use the rule of that one account of a borrower is an NPA, then all accounts become an NPA in this case, because it's an exception to it, one. And also when we understand the basically what is basically the requirement of doing a provision in case of NPA, is the reason is that we are basically doing a provision to take care of any probable loss which the bank is going to suffer because of non-recovery of the money. So in case where 100% margin is 100% funds are already available in form of a FD with the bank, then in that case it does not make sense to declare it as an NPA also. So I think in that case the norms for in case of loan against FD, the account should not be treated as an NPA, even otherwise when the other accounts may have become an NPA for that borrower. This is my view on the point.
Lokesh, there is another query which has come WhatsApp to me. It is whether
Hmm.
ad hoc limit given in CC accounts will be considered applying NPA norms.
Now, this is a point which we need to be very careful about, because sometimes what we see is that we need to first understand the reason why the ad hoc limit has been given. And I'll definitely require the view of Dhananjay and maybe Khannaji also here. But to my mind, the first point would be that we need to check for the reason why ad hoc limit has been given. If it has been given for a genuine reason and it is supported by a proper letter from the customer explaining the reason for that, then I would definitely consider that as a part of limit. But this cannot be otherwise an excuse for saving the account, which otherwise shows an inherent weakness. Say the CC account has been out of order from say the from the last 6 months, and on the in the last month an ad hoc limit is given, and somehow it is now claimed that the account is now within the limit because there is an ad hoc limit which has been given to the customer. I would be reluctant in that case. But otherwise, if there are genuine reasons for giving it, properly supported by the letter and some evidences from the borrower, then I might consider that appropriately.
Lokesh,
Dhananjay, if you can add on to it.
Yeah,
Lokesh, I want to ask one thing more apart from this.
Yeah,
Is
yeah.
there any letter of comfort which is given by normally big company normally used to give letter of comfort for their subsidiaries, and those loans become NPA? Whether that letter of comfort will serve the purpose to
I don't think, because what we need to consider is only tangible securities. Letter or comfort does not I don't consider that as a tangible security as a or even as a security at all. Because does it give any right to the bank to go against the parent company and claims any asset against the loan which may have become bad? I don't think that gives any right to the bank. And I have not seen whether a letter of comfort being registered as a charge against the parent company also in MCA. So I'm not comfortable with that fact of a letter of comfort. Dhananjay, if you can add on to it.
yeah. I will just add a couple of points about the ad hoc part which you said. What you said, I fully agree with that. I will just add two more points. As far as ad hoc limit is concerned, if you're talking about specifically NPA norms related to ad hoc limits per se, they are related to 180 days norms, wherein temporary deficiency para has been stated in IRAC circular. What that para says is if ad hoc limit is not regularized within 180 days, that is, if it is running for more than 180 days, the account will get marked as NPA. So that is about ad hoc limit not getting regularized. Second part is that, as you rightly said, we need to see on case-to-case basis as to whether the ad hoc limit is in the form of accommodation or whether it is getting arisen out of genuine reasons of working capital finances. So that is the second part which one has to see. But there cannot be anything blanketly said that if ad hoc is sanctioned, then account should be NPA and vice versa. You have to see that on case-to-case basis, barring cases wherein ad hoc limit is running for more than 180 days.
This question has already been.
May I just add? I think.
Hanji, sir.
Can you see me?
Yeah, sir. Please.
Yes,
please
sir.
go ahead.
Okay, I'll just chip in on this. You see, so far as the ad hoc limits are concerned, the issue is whether the amount, what is the intention behind the introduction of that money for the borrower? Is it to cure a default or is it for a genuine purpose? I think that's Lokesh what you mentioned.
Right.
So, but the RBI forbids any fresh loans being used for the purpose of curing the old default. That means if a default is made, the account is becoming an NPA, you cannot cure it by taking more money from the bank in whatever manner. So I would not even want to go into anything other than the intention of the party to do it and the intention of the bank to cure that default. And I think that should be the basic criteria. Because what is the intention? And particularly if it is done at the end of the year, I mean, the intentions may not be that honorable. That's the way I would look at it.
The next question is whether stock under LC to be taken for calculation of DP in CC account.
May I answer it?
Yeah.
Yes, sir.
May I try to respond to this?
Yes, sir.
Yeah.
You see, you need to knock off all the liabilities, whether it is unpaid. You see, to determine the unpaid for stocks, that includes all liabilities, sundry creditors level, and all that, and then come to what is the amount of the DP after the when you apply the margin to that. That means stock is particular figure. Then what is the amount that is not paid for in any manner whatsoever, whether it is LCs or whether it is any, creditors in the books, etc. All that has to be knocked off. Then you apply a margin to that net amount that will determine the DP.
Anybody want to add something?
Yeah, I will just add one point actually. The query is stating about whether the stock under LC to be taken for calculation of DP or not. The plain answer is that when you're talking about stock under LC or otherwise, when you're talking about the methodology of paid stock, whether it is under LC or not, that is irrelevant. So once you say that it is the DP which is sanctioned against paid stock, naturally out of plain accounting entries against the stock, the creditors will get knocked off and ultimately to become a nil value. So whether it is LC or not is not really a relevant thing in calculation of DP.
Dhananjay, if you can also add a point which sometimes people ask, basically on any stock which has not been physically received at say from the
Goods in
customer, from the
transit.
stock in transit maybe. So whether that can be considered as part of the stock for the purpose of calculation of DP?
Yeah, see, as far as goods in transit is concerned, if you are passing a accounting entry in your books of account, it will be a kind of a contra entry because when you are increasing the stock, the creditors will also get increased. So if you are going to consider goods in transit, then you need to also consider trade creditors. So practically, it really doesn't matter or it doesn't really impact on your DP. It's only a question of whether you want to show additional stock and also additional trade creditors or not.
Because
So whether
sometimes it might also happen that the person may have paid already, so there's no creditors. So legally, we can say that bank would be able to, because basically when we do a DP calculation, we are referring to the security part of it.
Correct.
So whether bank would be able to use that security in case it is required.
Yeah,
So whether the stock which is under trust can be
Lokesh, I would like to add one dimension to this.
right.
Your example, if you say that the payment is already being made,
Right.
now the question comes in: does that payment necessarily makes the ownership transferred of that
That's very
property?
important.
And that is a point which depends on the purchase agreement between the two parties. So you
Right.
can't just give a plain answer for a hypothetical case study. Like
Right.
I think we should stick to saying an answer that fine, if you have a stock under an LC, then you should consider that stock for that LC only. You cannot take it for DP in CC account. That's a plain answer. Further, Khannaji and Dhananjay ji have already given answer about how one should look at the drawing power calculation. Now, if the unpaid stock is to be considered or not to be considered is as per the bank's policy. Primarily, majority of the banks do not consider unpaid stock. So again, in that case also, they both have answered it well, But yes, in case of transit, if it is unpaid, as Dhananjay said, it will not be of a great impact because it would include trade creditors. But in case of yours, is a classic case of looking at the legal part of about ownership transfer. And now ownership transfer as per the Sale of Goods Act would be on acceptance of goods in the quality. It does not mean only payment of money. So there they would be having multiple options. So it would be we have to deal with the case specifically. You can't give a generalized answer.
Agreed, agreed.
No, I would put it like this, where substantial risks and rewards of ownership have got transferred, okay, in the good, and the purchase is complete irrespective of whether the goods are in transit. If the purchase itself is complete, I'll have to record my purchase.
Correct. Acceptance is important.
Therefore, based on substantial risks and rewards of ownership and control over the goods, it may be my agent who is bringing the goods in and not the agent of the supplier. So long I'm reflecting a stock in my books in whatever form, goods in transit or actual stock held, is there a corresponding liability thereon? Okay, if there's a corresponding liability thereon in whatever way, reduce it and then apply a margin and the DP is ready.
I will just add one point actually. Irrespective of whether the transfer of property happens or not, if the transfer of property doesn't happen, it will become a kind of an advance given to supplier. So anyway, it can be considered as DP. So you have to just go by your account.
My answer, my submission is, sir, that where substantial risks and rewards of ownership have got transferred along with the control, because now control is also necessary over the stocks. So it's possible goods were handed over to my agent for, or my truck driver for doing this. I have not received the goods physically, but the fact is that the goods have been purchased. Now either I have incurred a liability for it, which is in my books as unpaid for stocks, or I have paid for it. So the moment the intrinsic transfer of goods takes place in my favor, and I'm the owner of the goods, their location may be that they may be on their way, and I'm taking the stock, I will have to reduce whatever liability there is if I have incurred the liability, and if the payment is made, there's no question of unpaid for stocks. What is the stock I'm declaring to the bank? And whether I paid for it or not, that is the issue.
Yes. Right.
Okay, there is one query from, before we go to that query, further queries, there was query on chat. Is it any relaxation on renewal rules for Mudra loan? It is in the, it is done, asked in the panel chat. Is it
no is the answer. There is no concession.
Huh?
There is no concession. They have to continue the same policy which was there last year.
Okay. Right. Book date statement is showing amount of total debtors instead of term of sanctioned book debts allowed only for 90 days. DP computation.
But in my opinion, it is required to be as per the sanction term only. You can't simply give all the debtors and say that all are 90. If at all you want to say that all are 90, specifically mention in your stock statement all are 90, and then apply the analytical process review that what was the sales during 90 days, what's the increase in the sales and increase in the debtor, and it can very well say that the debtors are not matching with those. But you can't simply say that that's an all total data I have given. The bifurcation is required to be obtained from borrowers. There is no escape route, at least onto this side.
Is anybody want to add something on this?
No, the age-wise analysis of debtors is bound to be given the moment the bank lays down a condition that they are not going to finance or give a DP on stocks beyond a particular period, prescribed period of say 90 days in this case. Then if there are any stocks beyond 90 days, they will be ignored for the purpose of computation of DP. It's very plain and simple. I think Mr. Shah is very clear about it.
I've also got some query on WhatsApp also. It says, is from Akesh. RBI circular regarding MSMEs, this is a string, covers MSME borrowers having exposure not exceeding 25 crores. The word exposure is not defined, and various experts are taking different meaning to it. As Niranjan ji has rightly stated, we have to take sanction limit for calculating exposure. It is okay for working capital facilities and non-fund based limits, but will it apply for term loans also where there is no unavailed limit?
So in my opinion, exposure means the sanction limit only. Reason being, it refers to that what was the exposure taken onto that particular entity, and that's how the things are, right? So it is from that perspective, not from the whether availed or not availed. It is the exposure whether unavailed or availed. That is what my personal opinion is.
Niranjan ji, your view? Niranjan ji?
I will just refine, Kuntal, what you said. Exposure
So he
is
said, I'm repeating the question. He said, RBI circular regarding SME is a string covers MSME borrowers having exposure not exceeding rupees 25 crores. The word exposure is not defined, and various experts are taking different meaning to it. As Niranjan ji has rightly stated, we have to take sanction limit for calculating exposure. It is okay for working capital facilities and non-fund based limits, but will it apply for term loans also where there is no unavailed limit?
No, I will just add this, point actually. Exposure is, as far as sanction limit concept is concerned, that will be always a drawable limit. So if you are having a term loan which is already repaid back and there is no drawing, further drawing available, then that will be the balance outstanding as far as term loan is concerned. It's not sanction limit. So you can have a case wherein 50 crores is the sanction limit, and if you are having a present balance of say 1 crore, then that will get counted. I will just supplement that with another reference. The exposure word is also used in Basel III calculations. So you have to refer to that exposure meaning also, which is there in capital adequacy norms. Yes, Niranjan.
Yeah, actually, two things to add. Number one, we cannot say that there is no definition of exposure. Exposure is well defined in Master Circular on loans and advances also, and in Basel also. In Basel, it is more categorical about how the provision is required to be done. So that is more elaborative one rather than just an exposure where an outstanding commitment. But I would say that limit is not the correct answer. I think what I said, if I remember correctly in my MSME talk, is that exposure means anything which is sanctioned or outstanding, whichever is to be considered. Like say for example, one example Dhananjay gave was a term loan which would be sanctioned at 5 CR and outstanding balance is much less than 5 CR. Say in term loans also there is a standardized prepayment per month and X amount is reduced. Now, a borrower may have an option to pay a majority of the amount in 1 year itself. There is no such compulsion. Nobody stops you from prepaying the things in advance. So would you take it as a drawing value? No. So there could be a exposure which would be worked out. But idea here is to understand that overall the exposure of the bank should not exceed 25 CR. It would include a non-fund based and fund-based limits sanctioned or outstanding, whichever is to be considered put together. So there has to be, some application of mind in working out that exposure. You can't just take it to sanction limit. There could be an other side of the case also. Like there is a cash credit of say 1 lakh sanction, and its outstanding is 1 lakh 5,000. What will you do? Because 5-10% bankers do allow excess drawing. Sometimes interest is debited and it goes beyond the limit. So in that case, you can't expect that 1 lakh or a sanction limit is 1 lakh should be the limit. It should be 1 lakh 5,000 that would be treated as exposure. So you have to apply your mind in understanding what is exposure. In case of working capital limits, I personally believe if at all they are more than the sanction limit, then that should be treated as exposure. And in case of term loans, nicely explained by Dhananjay, if repayment has come down to a certain limit, whereby you are not going to give an additional loan to the same guy, I think you should consider that as a balance. So it would be a very clear understanding of what is the exposure. But by and large, you can't just relate with sanction limit. I think whichever is lower should be the thing you should consider.
I may tend to agree with Niranjan on this. You see, the actual exposure. Now, see, what we are doing is going by a factor of convenience more than conviction. Convenient factor is that I go by what is sanctioned, I don't have to do any further homework. But the fact is that what is the real exposure is the important thing.
Correct,
You
sir.
see, is somebody drawn? See, term loan, it gets reduced over a period of time. You take the term loan 5 years ago, 5 crores, and today it is only 10 lakhs. Okay. So what is your exposure? Now the bank is not going to say that I will, because 5 crores I sanctioned, so you're entitled to 490 today. You're not entitled to it. And therefore, the actual exposure is maybe slightly difficult to get the actual figures. That is a difficult thing to do. But the exposure, to my mind, is a real exposure rather than the exposure in the sense of what the bank has committed to give. See, the bank may have committed anything, but suppose nobody draws it. Suppose a person has taken a facility from a bank, never withdraws it, never goes to another bank. Then what is his exposure? His exposure not be a combined figure of two banks. I feel factor of convenience should not be considered. Is more than the actual exposure. No matter it may be a little difficult. For that, MRL will do. Find out from an MRL. Try and get whatever information or documentation or evidence you can get to rely on.
Sir, I will add to one more thing. MRL is a good option. Another option is you can ask for CA certificate of that particular borrower about giving exposure on a particular date. Obviously, I understand that you can't get a certificate of a chartered accountant on every quarter end. But as is once in a year, a recent CA certificate or an auditor certificate to that extent also could be obtained. Like in the past, we have relied on SSI certificates of chartered accountants, and I think we can rely on that. That is also another thing apart from MRL you can take.
An FIR has been filed. The another question: an FIR has been filed against the borrower by the third party to whom the borrower has sold the property mortgage to the bank. How the bank shall deal the same as the account has been, NPA, and the fact of forgery in the knowledge of the bank. Lokesh?
I think it's a very important question to answer, because now the first thing, in case I'm handling such a scenario, would be to first look at whether the bank is secured as far as the loan is concerned. What is the position of the property which has been charged to the bank? In case the property has been sold after it was charged to the bank, then in that case, and the proper documents are with the bank, then in that case, I feel the property, we cannot consider the bank is unsecured. However, in case they have tried, the customer has tried to sell off the property, and that fact is already in the knowledge of the bank, then it may be considered as a fraudulent account. That is something which we need to take care of, I think. So maybe Niranjan ji could actually add on to it, whether we would require, because I seriously have a doubt whether we should do 100% provision in such case, because otherwise in a fraud case, in case of a borrower account, in case there is a fraud, then we need to go for a loss asset. Whether I don't think in this case, unless until the bank got defrauded per se, we should go for 100% provision. Of course, we need to recheck whether the existence of the security as far as bank is concerned is intact or not.
Lokesh, I feel what needs to be looked into is, whether the fraud has actually taken place between the borrower and the third party, okay, squad the borrower and third party, and whether our security is intact or not. If my security is intact, even if my borrower is sold by somebody, I don't have to bother. The fact is, what are the documents on my record which establish that the property is properly mortgaged? Is it if the original title deeds are with me, he could not have sold if he has sold without any documents being given to a third party, that is for the borrower and the third party. So far as I'm concerned, my money is safe. I can encash the property, okay, through a legal process, and that is it.
Niranjan, if you can add to it.
Well, I agree to what you said, like if it's carrying a higher risk than a normal business risk, obviously it would be requiring a provision. If it is not demonstrating that and the bank security is still intact, I think one can go for, like as and Kannaji also said the same thing, So it has to be a subjective case. You have to look into the facts of the case.
You're correct.
If it is otherwise that the security is no more now recoverable in the case of bank, then obviously one would require a provision. If not, then naturally the provision is not required as NPA, but still it would be a forgery kind of an account. So due care has to be taken. Next.
Friends, since this seminar is also live on YouTube also, I've got some question on YouTube also from YouTube. In case of COVID-19, issue as operation is not running by the enterprises, then they take ad hoc limit, set 5 lakh rupees in addition to CC limit. As CC limit is approx to exhaust during these days to distribute wages and rentals. If bank approves, then what will be the status of account, NPA or something else?
See, just by sanctioning a ad hoc limit, the account doesn't become an NPA account. It depends upon what are the circumstances under which the ad hoc limit is sanctioned. If the bank is sanctioning an ad hoc limit to take care of overhead burden during the COVID-19 for the month of, say, payment of salary for February or March, anyway, the account status will never undergo change, because nowhere in the COVID-19 circular, no one has banned any bank to take a credit call. So it depends upon the credit call of the bank. Bank can very well sanction ad hoc limit, provided that the purpose for which the ad hoc limit is sanctioned is justifiable and they are within the credit policy of that particular bank. It won't have that account turn into an NPA account just because ad hoc limit is sanctioned.
Is there another question which has come to me? There are two dates specified in the circulars, that is date of restructuring and date of implementation of restructuring. The circular dated 1st January 2019 has specified that implementation is subjected to fulfilling two conditions by 31st March 2020. Hence, in a case where restructuring has been done based on circular dated 1st January 2019 and where payments are as per restructuring, but both or any of the condition is not complied with by the borrower by 31st March 2020, will the restructuring will be considered as failed and the account will be classified as NPA. Lokesh?
Can you, I'm just looking at the query. Can we do the next query and then I'll come back to it?
Sure.
I'm not very clear on the query myself.
Number one, like I just wanted to add Nitinji here. I think the query, I've read through the query. I think the query is not clear. Now, there is one condition of implementation, one condition of implementation of this scheme up to a particular date. Now, this is not specified for per borrower. This is the periphery of the scheme, like 1st January 2019 till 31st March 2020 is the period. It's the window given for restructuring. Now, I don't know where from this guy has got this two dates. Implementation, there is no implementation date, it has to be done before a particular date. So the query is properly written apart from these two dates. And I think account will be classified as NPA only if there is a default in compliance with terms and conditions. Otherwise, it will not be default is a simple answer. He's getting confused with respect to 14 February circular where there was a scheduled date as per the 180 days of IBC in the original restructuring about 2,000 crores and advances. Something similar is not given for MSMEs, but again, that's my view. Let Lokesh have a look at it during the next query, and then we may come back.
Or maybe we can ask.
I think the query is not. No, the query is not clear, and we cannot give a clear answer. Please understand. Yes. Somebody may misunderstand our response. Correct. If I am not able to understand the precise query, I will not be able to answer precisely.
True, sir.
And somebody may misinterpret what I am saying.
Yes. I will ask that person to
yes, to reframe the query precisely.
Yes, reframe the query. Yes.
Yeah, we want to know what is the element of default.
Right.
The element of default depends upon what he has agreed to and what he has not complied with. If I don't know the element of default, I cannot say it is NPA or not NPA.
Right. So next question is again on DP computation. Sir, in case of CC limit, if DPR as per audited financial is negative and stock audit report is not available, can it classify as NPA?
is a strong indication that the DP, I mean, the level is low or minus or whatever, and therefore the question of giving any amount against that, you see, and if it is already given, that certainly will be amount will be higher than the amount of DP available. So naturally, it will reckon for not being covered.
I think basically, if I can add to it, basically, the issue here is that it seems that the when we look at the audited financials, it may not be in line with what maybe stock statements the customer might be have been filing, and the stock statement might be showing that there is a positive DP. And when we look at the financials, the DP does not seem to be there as seems to be from the query. And in that case, we need to look at the operations of the account. We need to check on the possibility that the account, the stock statement which have been filed may not be reflecting the correct position. And then based upon the necessary evidence shown to us by the branch, we should take a call whether the account needs to be classified as an NP or not. Because the important part here would be that there are two statements basically, which seems to be coming from the query, and there are two statements basically, which may not be in agreement with each other. So I would rely more on the statement which has been audited, because that is coming from an auditor, rather than relying upon a statement which is basically only given by the borrower. And in that case, if other supporting documents are not provided to satisfy the auditor, that it is an exception only on us since the audited date, say on 31st March, and otherwise the DP is available, I would be, and considering the operations in the account, of course, I would be looking at the account being classified as an NPA. So that is more important. So we'll have to look at other factors also.
One more thing I would
Please,
add
please,
here.
the question is the value of the evidence. Please understand, which is better evidence? You see, what you are saying, and I'll put it in different way, that what is the evidence and what is the value thereof. Now, why do we ask for the audited statements versus the statement of stock given by the management on a particular day and compare it? So if we don't get it for this year, 31st March, we'll say, please give us last year's audited statements, which are available. Now, those audited statements show a value of stock which is much lower than the stock declared to the bank. How can you place reliance on the management's figures? Because he is working out on the opening stock as per his statement, pluses and minuses during the year, and giving you a figure of stock. Whereas the real values should start from the balance sheet figure, which is much lower. Therefore, the question is, what is the evidentiary value for what he's giving? So certainly, Lokesh, I agree with you. One should look into this from that point angle, and the audited accounts would be a better thing to rely on rather than the management statements.
And once, sir, I would like to add one more thing.
Yes.
Once it is, classified as NPA, then one may try to apply the erosion in value of security as an option rather than taking through the normal substandard and D1, D2, D3 mode. Like this is based on the third party evidence. If the auditor at the branch believes that the value of stock as declared and value of stock as assessed by the auditor, if the erosion is more than 50%, they can straight away take it to doubtful category. And if erosion is more than 90%, they can straight away take it to loss category. Because based on third party evidence, an auditor has come to a conclusion that whatever is the stock declared by the management of the borrower is not in existence, then certainly this clause also can be applied. And I think that should be the ultimate outcome if evidence is not satisfactory. An account is to be treated as NPA.
I think agreed. One question which has come on the chat, let me also take it up. It says renewal paper of borrower showing that sister concern of this account, which is with some other bank, is an NPA. Whether we should treat our branch borrower account as an NPA due to other bank NPA in another sister concern account. Please explain. So what basically I think the person is asking is that in case there is a borrower in our branch, which is per se not an NPA otherwise, but there is a sister concern of that borrower, which is with some other bank, which has been declared an NPA there, whether we should treat based upon that declaration of NPA with some other bank, our account here as an NPA.
The co-borrower concept doesn't include sister concerns, so there is no such thumb rule in the master circular which would allow them to classify it as NPA. But yes, it would certainly attract a higher risk than a normal business risk. So again, they will have to elaborate about what kind of exposure this particular borrower has with the sister concern, and if they are having in the nature of receivables, and if they are not going to be recovered, then the bank may decide otherwise, But plain query, no, it will not have a direct imply on classification of account as NPA.
I have to go by operations in my bank. As
Yes,
simple as that.
yes,
And I have to classify the borrower on the basis of the norms applicable
yes,
and as per
absolutely.
the accounting policy.
Record of recovery.
Okay, one another query which is there. It says if money is withdrawn from any account holder without his written consent, that is, his account is debited and credited the money to an account which is an NPA, then can this transaction be considered as a fraud? And if then why, and if yes, then why, and further, how should we report this kind of queries?
What is the intention behind the transfer of entries without any authorization from the person who's the account holder in the other case is very, very critical. I think a query will have to be made to the bank to evidence as to whether or not this is a genuine transaction by itself. You see, it could be that the bank's involvement is there. One doesn't know, because this window dressing and all is done every year, but by written consent or otherwise, and they reverse the entry after some time. Luckily, this year, the window dressing may be far too less as compared to before because of the lockdown. So you understand my point. It's possible it may have happened, but on a very low scale, it might happen this year, because around 31st March, people approach the bank and they do all this kind of NPA management. So I feel what needs to be done is find out whether it's a genuine transaction by itself or it's only a mere book adjustment, okay, by the bank or at the instance of the borrower.
I think it's very important in case supporting what Khannaji has said, that in case there has been a debit to the account of the customer and the debit is not supported by any confirmation, by any uh, uh, ec- uh, by any check or any letter from the customer, any express instructions from the customer, and per se there is no logic behind it for that transfer, then this is a fraud, because you cannot touch an account of the customer without his consent. And especially if the intention seems to be to save the account from turning an NPA, some other account from becoming an NPA, then it definitely needs to be considered as a fraud and appropriately to be disclosed as a fraud in the in your audit report also. And you may be required, because when you look at your appointment letter, it talks about reporting of frauds to the chief executive officer and to RBI directly also. So you will have to also consider that clause while reporting on such cases if you come to the conclusion that this amounts to a fraud.
I think it'll be too difficult to decide in a short period of time as to whether a fraud has been perpetrated. But the difference between error and fraud is this only, you know, that the intention behind the transaction will determine whether it's fraud or not. But let us not, because the fraud can be established by due process of query, examination of the people. So auditor should not take the risk of straight away reporting it as fraud unless he is too sure about it. And he can certainly look into this and find out why this happened. And in any case, has to report in the long form audit report. In any case, such a matter where this is not even evidence. But MRL must go. He must come to a judgment on this. Okay.
Lokesh, I just want you to please give some outline, or rather, whenever I've been with you on the seminars, you normally tell about interplay between LFAR and MOC. That somewhat you might have written a LFAR, but you haven't given them MOC. If you can explain it for the benefit of the members.
I think what I've been speaking about whenever I get a chance to speak to my fellow members on it. So generally, I tell people that what I've seen sometimes is, and I'm sure everybody would have received queries from other members saying that the branch manager, when we find out something which requires an MOC, the branch manager requests us कि sir आप MOC मत डालिए करके. And when we insist upon putting a MOC, sometimes what happens is they give us a option that you please put it in LFAR, don't put a MOC for it. And of course, when the central statutory auditor would look at it, would see your query, would then decide whether they need to put a financial effect to that query or not. So based upon your point in the LFAR, your purpose would be served by putting that in LFAR, and the central statutory auditor would also be able to take a call and do appropriately in case it requires MOC. They would be able to take care of it at the consolidation level. And this is what I keep on telling people is that please don't do it. Please don't do it at all, because they are two different things. If you feel that something requires a change in the financials, it affects financially the balance sheet, the profit and loss account which you are going to sign, the only option available to you is to put a MOC. LFAR is not a substitute of MOC. Rather, the consolidation, which, and I'm sure we have Niranjan here, which has acted as a CSA in a lot of cases, would be able to clarify it further. That basically the consolidation of the financial audit happens at the earlier point of time, and LFAR consolidations happens at a different point of time. So there might be a case when the consolidation of LFAR happens, and the central statutory auditor is able to find out a query which he finds is relevant and which should have impacted the financials of the bank, would not be able to take care of it at the time of when the consolidation of LFAR is happening. So it should not be basically a substitute of your financial audit, one. And secondly, whether your reports between your financial audit report, your main audit report, and your LFAR should be in consonance with each other. It should not be a case where, say, you are declaring something as an NPA in LFAR and there is no MOC in your main audit report, because in that case, that would be a clear-cut case of error on your part, which I think you should be avoiding basically. Niranjan ji, if you can add on to it.
Yeah, I would just say one thing, like all of us as branch auditors should remember that, our all reports are mutually exclusive. They all are independent report, and at least we will get 10 to 15 days time normally. Now, by this time, we should have been in the branches actually, but I don't know really because of this lockdown how much time we all will be provided. But I can certainly tell you, those who do bank branch audit get more time than the consolidating auditor usually. So the information is disseminated, and a lot of team members individually try to look at what is there in MOC, what is there in main audit report, what is there in certificates, what is there in long form audit report. And as rightly said by Lokesh ji, long form audit report consolidation generally happens after the balance sheet is closed and gets around time of 1 month after signing of financial statements or 30th June. This year, the same has been extended to 31st July. But still, there is a sanctity of giving a adjustment entry only through MOCs, because that is the only method in which you can identify that this is an accounting adjustment need to be passed out at consolidating office level. So my request to you all, humble request, please make sure that putting a MOC in long form audit report would be a wasteful exercise probably, in a sense that by the time somebody goes for LFR consolidation and they find out that there is an entry which should have been done as a MOC, at that point the balance sheet is not open. So sad part of it would be ideally the branch long form audit report point also may have to be dropped while consolidating the particular region or particular zone. So my request to you all, only one method in which accounting entry or adjustment entry with respect to those 9 items of income, expenditure, asset, liability, gross NPA, NPA provisioning, Basel related risk weights, and any other item are not covered under this. All adjustment with respect to your MOCs would be done through only one MOC format. You can give additional details of, elaborating the explanation about MOC in long form audit report. But yes, keep it separate, and that would be helpful.
To what Mr. Niranjan Joshi has just said, I'll only add one thing. So it's not only MOCs concerning the quantified transactions, there may be unquantifiable transactions. You cannot quantify the qualifications. Those will all come in the main report. You see, why is it called a long form audit report? Because it elaborates what is there in the short form report. It can elaborate. Then there are matters of suggestion, etc., which do not find, any place in the main audit report, because it is not the statutory audit responsibility of reporting, and therefore what is not statutory auditor's responsibility of reporting can go into the long-form audit report, which can also elaborate the qualifications. Uh, because, you know, in the main report, you might say provisions have not been made to the extent of 10 crores. That's good enough. And you know, you can give the basic details. But in the long-form audit report, you can say these are the parties, this is what happened. So all that can be elaborated. So that is the point of difference. Lokesh, otherwise, what you've said is absolutely correct, that it is not a substitute for the main report.
Okay. There is another query. Can bank short-term review in any loan account everywhere? Short-term review.
What is the real sanctity of a review? A short-term review in most banks, what they do is they don't even really review it. They just want, because they were lazy about, the normal renewal. So they have a short-term review by not even calling for much of information, because review means you have to call for information. Suppose it is short to some extent, something is missing in that thing, you do a short review. There's no issue on that. And even that is restricted to, 2 reviews, that is 6 months. Otherwise, you know, it gets into the status of an NPA classification. So there's no such, you know, let me tell you, the short review should also be looked at little more carefully. Because you cannot say that every bank will be allowed that after 18 months you will renew the limits. A review must be a proper review. It should not be an eyewash. It should not be a technical thing that I've reviewed the account.
Okay, the next question is point to be covered in CAM, key audit matters.
Right. Somebody wants to answer it, or can I briefly touch on it? You see, I think branch auditors have been taking this matter a little too lightly. You see, this is not arising because of a qualification. This question is a basic query made on some issue which could have been qualified by the auditor perhaps, but he's satisfied on the basis of certain evidence that he has received that he need not do so. That means some matter of importance that could have an impact on the accounts. He queried, he was satisfied with the evidence, and therefore he brings it in the report.
Anybody want to add in this?
Well, that's a fundamental thing that, you know, one needs to see.
So is CAM is applicable to bank branch audit since?
Yes, absolutely.
Okay.
Why not?
Since I'm doing branch audit, is supposed to be looked after by
No, sir, no.
CSA or not?
Let me put it this way. CAM at head office is differently applied as compared to the branches. The branches are the operating levels, so advances and all major item is covered. At the head office, investments may be covered. So there may be other issues at the head office, but there may be issues at the branch which would impact the branch accounts. So therefore, the auditor has to consider what he did, what procedures he adopted to be satisfied that his query was okay, so that he is not charged with negligence at a later stage. So there's an exercise of judgment. You see, non-exercise of judgment will land him into a problem. Whereas exercise of judgment and maybe coming to a conclusion which may not be justified, still he has applied his mind, he cannot be charged with negligence.
Unless we have got a query on WhatsApp.
Let me just,
They asked
let me
me,
just,
can you
let me
put
just
some
add-
light on, is somebody saying? Oh, sorry.
Yeah, let me just add a point related to CAMs. Actually, as far as our institute stand is concerned, institute is taking a stand that CAM is not mandatorily applicable to branches. That is a branch audits. But as a corollary of that, what it means is you can always optionally adopt that CAM at any point of time. Now, the reason why I'm saying that, since the institute is saying that it is not applicable to CAMs at branch level, let me just put it in a different way. So let's presume that CAM is applicable to at the branch level. I'm just saying hypothetically, let's presume that. What it will mean is every branch auditor will have to give a confirmation that there is no CAM is there at the branch level, which will become a kind of a little difficult situation. Because if you follow SA 701, it also warrants the auditor to specify that there are no CAMs are there. Now that is something which is little difficult for the branch auditor. The reason is there is another reason also, that what we do at the branch audit level is not really that we are auditing the financial statements. What we audit is only a set of financial data. it depends upon every bank's practice as to whether that is really a financial statement. So practically, if you see at most of the branches or most of the banks, the branch auditors are certifying or expressing an opinion on the trial balance rather than really a financial statement. So CAM is something which, as a branch auditor, one can very well adopt, but that will be a optional thing. Mandatorily, I don't think that SA701 should be adopted at the branch level, because if you want to adopt that, you need to give a confirmation by saying that there is no CAM if you don't want to report that. That is as far as SA701 is concerned. So I thought that I will just add that point about SA701. And the query is a little different actually. We deviated from the query. Query is about points to be covered in key audit matters. So I'll just like to respond that you have to go through SA701. And if you feel that if there is any CAM is there, you have to follow a proper procedure to report the CAM. And the procedure is also defined in SA701. The format is also defined in SA701. There is no ready-made list is there which says that which are the points to be covered under CAM. It will depend upon every audit, whether you are doing a bank audit, whether you are doing a company audit. It will depend upon your professional judgment to define that which points you want to cover under CAMs.
So I got query from on WhatsApp. Can you can panelists put some light on subvention certificates? Is it what is the difference in certificate and the report? What are the areas to be looked into? Subvention as to interest. Can you put some light on that?
I think the important point which we need to understand, and we need to keep in mind also, I think, and I'm sure everybody understand that also, is that our responsibility towards the certificate is much greater than what is there towards our audit report. Of course, we are responsible for both of them, but the degree of responsibility definitely changes. So we need to be very careful, because what generally happens is that certificates are provided to the auditors at the last moment, and generally they at that moment feel that they are not able to get it checked, and sometimes they also tell the auditors that it is generated by the system, so you need not check, because in any case the system is not going to generate a wrong certificate. So I will only request you that please don't get into that idea. You need to verify the certificates, and the best way is that before you go and start doing the audit, you should ask from the management, in case the closing circular does not specify it, that what are the certificates which are expected to be signed by you, and please ask them to provide the certificates in the initial 1 or 2 days itself, so that you have sufficient time to check them as per whatever way you want it to be checked, and go for it. As far as the norms for interest summation is concerned, which is one of the important certificate which you are going to sign, I think we can take it at the last after the question answer session if time permits. Otherwise, what I'll do is I'll share the important circulars which are applicable to interest subvention, because there is not one interest subvention which is there. There's interest subvention for agriculture, of course. There is an interest subvention for MSME. There is interest subvention for exports. There is interest subvention education loans. There are many interest subventions. So maybe after the questions answer session is over, we can definitely take it up at the last.
Sukesh, at least put that line.
Nitin, only my one submission is this: with regard to all certificates, be it interest subvention or any other, please look into the language of the circulars which is churned out by the bank. They give you a draft of the certificate, okay, in which you are supposed to sign. And lot of the auditors don't even read the language of that. And since it involves a whole lot of responsibility, you should not be signing away your death warrant, as I put it. You have to read through what is written, and please give a certificate in the line of your own responsibility, not adding on to any responsibility which is not required. Therefore, please look into the language of the certificate given by the bank. You can substitute it by your own language, okay? But if there's a format given by the government, you want to have any disclaimer of it, you can certainly do that. But the certificate should not be signed away blindly.
Sir, can I add something to this? I
Yes.
think we should, make one point very clear, that the format in which currently the certificates are being obtained from branch auditors is absolute assurance, whereas actually we carry out the testing according to statutory audit, which is a reasonable assurance. So we have to understand the gap between expectation is that you should check 100% and give a true correct view, but we actually do test check and try to give true and fair view. What I would like to do is just have a look at this particular document which I am trying to share. Somebody can just exclude it so that I can share something.
Yeah, I have switched off my sharing, so you can do now.
Sure, thank you. This is a guidance note on the reports or certificates for special purposes. I think issued in 2016. This is the revised edition. I think we all should try to use this from starting point, like from acceptance letter, from engagement letter, whereby we would say that our certificate verification would be based on this, and we will not be able to do 100% checking. Like some of us would be going to Moffisil branches, or maybe branches where number of borrowers are certainly very big in numbers, whereby 100% verification is really difficult. So I think you can make use of the standard covering formats which are given for report of issuance of certificate, and we may use, as rightly said by Khannaji, about the exact things what you have performed, what a responsibility you are undertaking while issuance of a report. Also make sure that everywhere in those pre-printed formats, wherever you can change those formats, it's good. Wherever you cannot, at least put a stamp which would read like as per our report attached, so that the reader of those certificates would also understand that along with this certificate there is one report which has to be read by us, so that our understanding of how this certificate has been issued would be very clear. So I think these two important things one should remember. I think the guidance note 2020 also has a appendix suggested format as a covering letter for all these certificates. I think you can download that and may use it by issuing a report in a particular format for your respective bank.
I think a very relevant point, Niranjanji. Thank you so much for sharing it here for the benefit of all the members.
Which
Okay, so we can take
I want you to put that line. I want to put that at line that what RBI is supposed to take care of some matter of errant auditors. We are not taking this certificate very seriously. There's particular line which
there was a circular which came from RBI actually, which was in relation to interest subvention itself. There was a circular which came a few years back, which actually talked about that in case we find discrepancies in the certificate for interest subvention issued by, it was not in relation only to statutory audit, it was in relation to any certificate of interest subvention issued by an auditor. In case we find discrepancies, then an appropriate action may be taken. So that is in any case there. So we need to be very careful about such certificates. And we should also understand there is a responsibility which has been cast upon it. So we should be able to discharge that responsibility in an effective manner, so that RBI or any other authority which is casting that responsibility upon us should not feel that the responsibility somehow is not being properly discharged, and which is not serving the purpose actually, which would actually remove that opportunity from our area itself, right? So I think Niranjan ji jo unhone bataya bahut hi acha bataya regarding that certificate and the guidance note which is there, which would be really helpful for all the members going forward. Chal, we'll take up the next question.
Actually, there's a history to it. We came across this issue way back in '84 when I was in the council. So we came out with the first guidance note then. We said, please distinguish between a certificate and a report. And there is a lot more responsibility, so you need to be very careful. And this has been revised. And, I think we need to follow the institute's guideline on this.
Of course. Chaliye, jo questions are wo lete hain.
if valuation report is older than 3 years, what can valuation of property be taken, and discuss its other effects? Can I repeat the question?
Is it above 5 crores or below 5 crores?
So
it is not mentioned in the query, sir, but it is a generic one.
We'll assume that it is for that, above 5 crores.
So can we answer both the things? Let us presume both the things are there.
Okay. I think the thing is, if the valuation report is older than 3 years, what is the credence you give to the valuation shown by the bank? See, one question we always ask the bank, and we have it in our mind. as to the existence and the realizable market value of the securities, isn't it? So firstly, if it exists or not, we need to be satisfied. Secondly, if the valuation is over 3 years old, what could be the value today? Suppose it's a property. We know properties have generally deteriorated of late by 30-40%. And now with COVID, of course, we don't know what the deterioration might be. So one may ask for the basis on which the valuation has been taken by the management to justify the provision. Ultimately, you need the security value for purpose of provisioning. So please ask them what is the basis adopted by them as to, and how they have accepted a particular value. Not verbally, put it down in writing, and MRL will be necessary. But please also put in the long form audit report that this is a list of accounts where the property valuation is older than 3 years, and we have gone by the confirmation, or other evidence available on record as to the existence and valuation of the property. I think that is the only answer that one can give. But if you feel that the property has deteriorated, if you come to that conclusion, then you certainly can take that value for the purpose of your classification.
And I think I need to also add, though it is not specifically asked in the question, we need to be very careful about valuations as far as basically assets which are basically depreciable assets. In a lot of cases, what we have seen is that in case of maybe car or in case of maybe computer loans, consumer loans, what has happened, the security value is taken as the value at which the asset was purchased, say maybe 2 years back, 3 years back, 5 years back, and that same asset value is continuously been taken. That cannot be accepted, and specifically would have a serious implication as far as the statutory bank audit is concerned. Like in case the account is already an NPA account, the security value would actually may also change the provision requirements which may be there against that asset, and otherwise also it would have implications. So we need to be careful about the security value which the bank is taking, and sometimes we have seen discrepancies in that which we need to appropriately take care while doing the audit.
The next question is, if the account is due for renewal on 36 2020, sorry, is it
30th June 2019,
19?
the account was
not short reviewed, but full renewal done on 26/12/2019 for 1 year, that is 25/12/2020, or the same to be renewed to 29/6/2020 as remaining for 1 year before account turning technical NPA result in extending review date.
No, but the account should have been the 30th June 2019. The account was not short reviewed even. So what did they do? How are they continuing the facilities? You see, it may have been done within 6 months. RBI permits that not more than 6 months shall elapse. But in the normal course, as per the policy of the bank, the review should have been done within 3 months. Normal policy of a bank, as I know it, that every 3 months they do it, and 6 months that is why two reviews are allowed. But here you're actually renewing it for a period of 1 year up to December 2020, which means virtually there was you are granting them a renewal not for 1 year from the original date, but from you are supposed to do renewal once a year, isn't it? I don't know. Technically, this may not be correct as per RBI. Really, this is not correct. But I don't think there should be any alarm or concern if even if it is done on 26th of December 2019 and everything is okay. How would it be if it was an NPA or an irregular account or account which is at a borderline?
Yeah, I will just.
Is there anything, something like this, you can't renew it more than 1 time or 2 time or 3 time? You can renew it n number of time as you want, short term review?
See,
no, not more than twice. Once in 3 months is the policy normally of a bank.
I will just add one point over here. As far as short renewal is concerned, how many times the bank wishes to do a short renew, that depends upon the credit policy of the bank. What is pertinent is that as far as RBI circular goes, it's categorically stating that if the account is not regularly renewed within 180 days, the account will turn into NPA. There are a couple of banks which are having their credit policies wherein 3 times short renewal is mentioned in the credit policy, and the hierarchy goes on at a higher level. Like first renewal will be at a lower level, second renewal has to be done by the next higher level authority, third will be by subsequent higher level authority, but that is a credit call. As far as auditors are concerned, and if you are referring to IRAC norms, then once it crosses 180 days from the date of original renewal, the account will turn into NPA. Now, here the question was that from 30th June, the account was not short reviewed and directly it was renewed on 25th December. So anyway, once your account is regularly renewed, then the account has, has cleaned off the anomalies and the account will be PA. As far as whether the renewal should be up to 29th June or whether it should be up to 25th December, that will depend upon the credit call which is taken by the bank. So as an auditor, one need not have to really bother about that, provided it is well within the credit policy of the bank.
I got a query on WhatsApp. They want you to put some light on agriculture advances also, including KCC. Uh, if some of the panelists can put some light on that. Lokesh?
I think as far as the KCC norms is concerned, I'll try to keep it short, and I'll try to, from my side, to make it clear exactly how the KCC norms happen in case of the IREC norms happen in case of agriculture loans is concerned. See, please understand one. Sometimes there is a confusion as to the point what are covered by the IREC norms which we are going to now discuss, which is basically relating to the crop cycle. So the Master Circular 2015 of which talks about the direct circular has an Annexure 2, which gives the list of farm loans. Basically, these are the loans which, to my mind, are covered by that guidelines given by in terms of IREC norms for crop cycle, which would be considered as an NP as per the crop cycle. So you need to first understand, look at that list to be sure as to in what cases the IREC norms for crop cycle would be applicable. Secondly, we need to understand, I think, which is very important also again, is we need to understand it from the point of view of the fact that that there is a lot of confusion as to how we need to calculate the due date. Then we need to calculate on the fact that how much period again after the due date we need to give before an account can be classified as an NPA. And there is also now a heightened confusion which need to be clarified, because last February 2019 there was a circular which came for KCC in case of animal husbandries and fisheries. So now it came only in the Fab 2019. So last year I don't think there was any impact of that circular per se, but this year definitely there would be impact. We need to understand that now there are two types of KCC which you are going to encounter when you go for an audit. One would be the KCC for crop loans, which would the IREC norms would be applied as per the crop cycle, and there would be a KCC for animal husbandry and fisheries where the normal IREC norms of 90 days would be applicable. So please, when we do the audit this time for KCCs, please first ensure that we need to be sure that wherever we are checking, what the KCC are now of two variety. One is relating to crop cycle, the for what is given basically for crops, and another is for animal husbandries and fisheries where this benefit of crop cycle is not available. So please remember that. Now, second point, in case of crop cycles, in case of where the loan has been given for crops, I'll try and explain that in short. Basically, it talks about two things. One is a long-term crop and a short-term crop. And then the circular says that if the crop cycle is more than a year, then it is a long-term crop. And if it is not a long-term crop, it is a short-term crop. Now, the confusion arises from the fact that when we go for an audit, generally we do not have an idea what crops takes whatever time, what time. And it may be sometimes also different in different areas also. So for that, what is important is that we refer to the state level bankers committee circular, which is there in that state. We take the copy of that circular. We looked at that circular. It would help us in identifying what crops are grown here in this area and what is the crop period in that. What is the crop season? How much time does it take for the crops to grow? So that they would identify. They would also tell you the scale of finance which is applicable to that crop. and that would be basically used for the purpose of determining the limit under KCC. So that is something which is very important. Now, in short, if I try and explain that, is that say suppose there is a in case of short-term crop, let us say the loan is given on April or May 2019, the first short-term period. So generally, what they give is, say the crop is a short-term crop. It is the harvesting period is 6 months, but the person would not be able to pay once the crop is harvested. So you will have to give him additional 2 to 3 months for the purpose of at least basically selling off the crops, and then only the money would be realized, and then he would be able to repay the loan. So generally, the repayment period which is given is generally the harvest period plus at least 2 to 3 months. So say let's assume it at 31st December 2019 for that year. So he has to repay the loan by 31st December 2019, and in case it is not repaid, then the account would become overdue for payment. Now, basically what RBI says, we'll have to give another two crop seasons to him before we can classify this account as an NPA. So basically crop season means from the date you have sown the crops to the date you have actually harvested the crops. So practically it would mean another 2 periods of 6 months each. So at least one more year would be required before an account can be classified as an NPA. So from the due date fixed by the bank, you'll have to give at least one more year before the account can be classified as an NPA. Of course, there may be different opinions on this point, but this is how I look at when I look at from the KCC point of view or from the IREC point of view. In case of the long-term crop, it is only one crop season. So one due date fixed by the bank, and then another crop season, which would be definitely more than a year. So whatever is the crop season that you'll have to give before then account can be classified as an NPA. So this is the norms as to me. So if anybody can want to add, they can definitely add to it.
I think the best thing would have been if a chart would have been prepared, So I don't know whether I can project it now on the screen, but this is the kind of chart. Yeah, I'll try and project it and see if anybody can make out anything out of it. You see, the first part is, also this coming the other way around now. But, in the audit program guidelines, and, we have given the audit program we prepare every year, we have prepared a chart which says the first crop season, second crop season, third and fourth as a header. Then we say this is the loan date, say 13th of April 2018. And this is the date of grant of the loan. The season expires on 13th of October. We took a live example. So the payment is due 14th of October, it becomes overdue, but it is not an NPA. You're absolutely correct. Not an NPA. And this continues for 2 more crop seasons. But the moment the season ends, not 31st December, the moment the second crop season ends, the next day, it becomes overdue after that. And then when the next season, the fourth season starts, at the beginning of the fourth season, the account may still, it will become an NPA. That means first season, second season, third season, the beginning of the fourth season becomes NPA, and 31st March may not coincide with it. So it continues an NPA up to that date. So that's the way it is to be looked at. So this chart that we have prepared is on that basis, that when is it standard, when it will change from standard to an NPA, the dates are given. So I think it's better to give a live or practical example to the participants. Sometime it will be better. If Nitin, if something can be sent out to the members through email that this is the kind of a chart you should have in front of you, it makes it very easy reading. Because I've given this chart to a lot of people who asked at the time of the audit, and they immediately are able to resolve the issue to show them, actual figures. I gave that in connection with subvention also, so that it is helpful for both. Theoretically is correct. What you have said is absolutely correct theoretically, but somebody sees the figures actually in the dates. One is able to make out.
We can definitely take help of your office to actually prepare a chart, and we can definitely forward
I'll send it to you. I'll send it to you.
Yeah,
I'll send you a very short write-up on interest subvention also, and the kind of chart you can prepare. It'll be very easy for the auditors.
Right.
The feedback I get is that this has been helpful.
Right. Okay. Then let's complete other questions.
Yes,
first.
yes, yes. I'm talking about staff advances, what and how to verify, and plus whether CIBIL for staff loan is compulsory.
Sir, I think in case of staff advances, CIBIL, there is no exemption per se from CIBIL. So it might be a case that staff might have taken advance from some other bank or some other financial institution. So I think CIBIL should be taken out as a matter of prudence. There is no uh, specific exemption also which is available to staff advances. And as far as IREC norms is concerned, I think again for IREC norms also staff advances is not a separate category and is to be whatever norms are applicable to other cases would be applicable to staff advances as it is. So there is no exemption which is available to staff advances.
Okay. Mostly bank have RA, CPC or centralized self for loan and their audits separately. Whether we have to check loan files or not. So this is the why I'm asking you whether the branch should have a CAM also or not. Because since normally the bank used to have a bank hubs, bank branches, we used to have loan hubs, right? So is it still need of CAM? Retain this question with that.
Yeah, as far as RICPC or centralized sales for loans are concerned, then at least in nationalized bank, there is no separate audit of RICPC. Actually, what is expected is that your loan files which are related to your branch might be lying at RICPC. So all the banks are having a practice wherein the auditor can draw a sample and give it to the branch manager, who in turn will arrange those files to be available to you for checking at RICPC. So the auditor has to go to RICPC, verify those files because the physical files will be at RICPC, and then draw the conclusions. There is no exemption from checking loan files. Rather, you have to go and check the loan files at RICPC instead of at branch.
Bank manager sanctioned a limit which more than calculated drawing power at the time of sanction on the basis of projected figures. Further, actual figures are lesser than 30 to 40% by projected figures.
So what is the query?
What is this?
The query is
Yeah, but why? How is it that he's calculated DP on the basis of projected figures?
Too much hypothetical question.
Yeah, no, I know. He has to calculate it on the basis of the existing figures. See, projection anybody can give. He may have a turnover of 1 crore. He'll say my projection is 10 crores. So will he get a loan on that basis?
Actually, I suppose the query was that the limits are calculated based on projections, and
Sometimes
the
in
DP
case
might be on a
of
low.
limits against property, sometimes they take a projected turnover for the purpose of calculation of the limit. This is one of the criteria for determining the amount of limit which can be granted.
Right.
And sometimes what is that there is that the customer is giving figures which are not achieved year on year. So they are saying that we will achieve a turnover of 5 crores, and every year they are only achieving a turnover of say only 2 crores or 3 crores.
Right, right.
So a borrower should be taking in such cases.
Yeah, it will be only a LFAR point actually. Nothing
No,
more.
the appraisal doesn't seem to be okay on the basis of historical facts. Then please understand, an appraisal is made now, and the historical facts are that he's never achieved his projections. He's giving much higher projections, so the limits are not being given on a realistic basis. It's not need-based finance then it's greed-based finance.
We need to be careful also, I think, in such a scenario is that where is the money being utilized? Because suppose the limit has been granted based upon the turnover estimation of 5 crores and the actual turnover achieved is say only 2 crores. So, and he is utilizing the limit completely. And in that case, the concern would be where is the money being used actually? Because his requirement as to the working capital finance would be much lower in case he's only achieving a turnover of 2 crores. So we need to be also careful about the utilization of them, and we need to be safeguarded against the fact that there may be a misutilization of funds or diversion of funds in that case.
Lokesh, my question is, you see, the bank already has details of the past projections and achievements. Okay,
Right, sir.
and it is appraising it. On the basis of that appraisal, the appraisal is therefore not appropriate because already has drawn money on the basis of the projections last year, which will be much higher than the actuals. So does he want to continue with that because he's not able to pay back the loan on the basis of the projections never achieved? So I think the appraisal will have to be very carefully done. Let me tell you that the biggest cause of the NPAs in this country is bad appraisals, the due diligence not being done, or there is done very improperly, very casually done, or done in a desperate hurry to provide accommodation to the party. Appraisal is really the cause or root cause of most of the problems with the borrowers, which result in NPAs. You look into the history of the NPAs, you'll find somewhere appraisal or reappraisal has been badly done. So this is one example of that very clearly, and I think here is where we should not ignore it as the auditors.
Now the next question is, sir, we have checked last year documentation of many accounts and found there's a lots of problem in documentation due to ignorance, and even they are not worried about it. We have reported in LFAR or any other reporting is required.
I think as far as documentation is concerned, of course, LFAR is the appropriate place to report it. But I'm really concerned when it says documentation. We are not talking about perfection of securities. It should not be a case that, say, we are saying that we have taken a property as an equitable mortgage, and the lack of documentation means that the equitable mortgage itself is not getting created. Then it would definitely be more than an LFAR issue. So we need to be specific about what kind of lack of documentation is concerned. So if it is not affecting my security per se, then to that extent, it would definitely be part of LFAR. But if it is getting somehow my security creation is also getting affected, then it would definitely be more than an LFAR issue also.
I agree with you, Lokesh. You see, documentation, you have to see the criticality of the documentation, which brings about a risk on my exposure, on the exposure of the bank. If the risk is great because of the documentation not being complete, I also am very wary about over documentation. Under documentation, over documentation, and blank documentation, all are dangerous, if you ask me. Blank documentation is the worst because it is the highest risk factor for a bank. God forbid something happens and these are filled up later. A forensic audit will immediately tell you that these documents were not filled up at that time. Nobody agreed to the terms and conditions. So I think the auditor should be very careful. He should report under documentation, over documentation, and blank documentation, definitely in the LFAR. But if it impacts the risk of the bank, in that the risk is such that it may turn into an NPA, I think you should bring that into the main report. You can even ask for a provision.
Then the next question is, sir, payment of installment of term loan of plant and machinery from CC account is diversion of fund or not?
It's not really a diversion of funds per se. You have to see it on case-to-case basis. It depends upon the circumstantial evidences. On a blanket basis, it cannot be called as diversion.
Till the CC account has sufficient drawing power in it, and if we use that funds for the purpose of repayment of a term loan, installment of term loan, I don't think there is a problem. But in case we are overdrawing the CC limit and then somehow paying the installment of term loan, then it might be considered as irregular. So within the DP limit, I don't think it should be a problem. With going beyond the DP and then paying the installments out of it might be a problem.
Yeah.
It's possible that the CC may become NPA, so the term loan also will become NPA.
Yeah, sure.
Okay. The next question is, if the bank provided facility for reimbursement of the asset purchased to the bank employees, and during audit, if we find some fraud or undue in reimbursement of that amount without even purchasing the assets, then what should be the further proceedings?
See, if it is a fraud, see, if it is a fraud which you are concluding based on master circular fraud, you have to consider that as a fraud. If not, then you have to just report it as undue reimbursement. So you have to take a judgment based on what is the type of this reimbursement facility has been misused.
Okay. Accrued interest on term deposit is recognized at the rate of FD on 31/3/2019. Interest is payable on quarterly basis. Next interest date is 3/6/2020. whether we have to check all the FDs broken before maturity, as FD broken before quarter, then interest to be paid at lower rate, which will reduce expense of the bank.
I am not very clear about what is asked. You see,
Can I take this question? Basically, what they have asked is about, whether they have to check 100%. Answer is no, it is again based judgment. So how many such premature withdrawals or closures or fixed deposits during a period they want to select is their own based judgment. So based on maturity and based on, the sample size which satisfies their comfort zone, I think they can pick up things. And then based on that, they can check whether appropriate reduced rate of interest has been paid to these these deposit account holders on premature withdrawal. I think that's good enough. 100% not expected.
Sorry. Whether registration under MSME is required to get the benefit of registering circular on MSME.
Registration is not required. The account should be a MSME account.
Multiple things you can.
There is no need of getting registered with MSME.
No, Udyog Aadhaar is the only registration under MSME. And for trading concerns, it is not permitted to register there because they don't have that trading column in MSME in that particular Udyog Aadhaar. Whereas the interest subvention and restructuring, the condition is either this MSME registration or maybe your GST number, PAN number, or account being classified as MSME by the bank in its own CBS system could be the options we can exercise. So naturally, you will have a limited application for Udyog Aadhaar. Subsequently, in February 20, the interest subvention circular of February 19 has been amended, saying that the Udyog Aadhaar requirement has been dispensed with also. So now for subvention, there is no such condition of MSME registration also. So I think we should fall in line with.
They have allowed trading activities without the UN.
Yeah, yes.
5th of February.
Yeah.
What is the responsibility towards fixed assets and deposit schedule at the branch? I believe this is the issue when normally the bills are not being entered in the books of account, or rather when the bills are not received, whether the assets is already been installed in the bank.
You see here the problem is, though of course the fixed assets form a very tiny or minuscule part of the main balance sheet, and one may say it is not very material, yet it is important. You see, most of the banks have centralized the recording of the fixed assets, but the assets are purchased at the decentralized offices based on an authority or direction given. Now here the issue is, whereas the fixed asset is purchased by the branch, it has zero amount in its trial balance. So the auditor might take a very light view that because it is not there in my trial balance, I have no responsibility for it. But the fact is that there are transfer entries of fixed assets, the original evidence of which is at the branch, and that has been transferred out to the head office. So if there is any liability towards fixed assets purchased, which has not been recorded, and the branch will say, well, if I had paid so much, I have only transferred the entry to that much. We found in one of the cases that jeeps were purchased by one of the branches on its own behalf and on behalf of other branches. But the value in the books was only the original advance given. So for 5 years, this continued. So the person kept on harping that I have sent you my bills, you have not even paid for 5 years, can you imagine? So we said, what is it? The asset has been purchased and consumed also, and you have not even recorded it. I think the responsibility is there with regard to the verification of at least the major items acquired at the branch and transferred out to the centralized office, because the depreciation will get impacted accordingly. And if there's a liability, yeah.
So सर कई बार इशू ऐसे भी आता है, कभी आप बैंक में आप ऑडिट करने जाते हो और आप बोलते हो कि भैया ये एडवांसेस क्या, पूछते हो ये एडवांसेस किसको दिए हुए हैं, तो बोलता है कि पैसा भी तो एसी के लिए दिए हुए हैं, तो बोले वो एसी आपके लग गया क्या, तो उसी के नीचे तो आप हवा खा रहे हो, राइट, हवा, अब उसी के नीचे हवा खा रहे हो, तो आप बोल रहे हो सर आपने तो एसेट लगा दिया ऑलरेडी, बोले आपने बुक क्यों नहीं किया, बोले बुक इसलिए नहीं किया बिकॉज अभी तक बिल नहीं आया, I'm talking about that issues also.
Sir, there are both the things. Firstly, an advance given is an indicator that some adjustment has to be made on account of the assets for which the advance was paid. Secondly, where the bills have not been received, the liability itself has not been recorded, or the advance is a small amount. So both will get captured. Important thing is that the assets purchased through the branch should be looked into, and a query must be made of the branch at the year end as to whether there is any liability on account of the purchase of fixed assets or otherwise. Both are important. And don't forget, other advances you have to adjust against the liability at the branch.
नहीं सर, when you already आपने asset को already put to use कर दिया, जब आपने depreciation डाला क्योंकि bill आपके पास नहीं आया, so it will not misstate the profit loss account also, since the depreciation is not proper.
No, you will not adjust a liability without any evidence. You will not.
Asset is already been installed. You are taking the air from the air conditioner installed over there. So
you see, normally there's a quantification which is available because you pass a bill for a particular amount, okay, and then what you do is you pay only an advance, keep some money unpaid. So the amount is known in all such cases. Without knowing the amount, you cannot do anything.
Lokesh, you take on this?
Yeah, I think we need to take care of any advances which has been given and appearing in the books, and which, of course, somebody might not have taken care of in that sense. So we need to put an appropriate entry if it is required. So I think that is our responsibility, definitely. We should do it, I think.
How to verify contingent liabilities and ensure complete disclosure?
There is for contingent liability, there are of various nature. One is on the bill side, one is on the acceptance side, LC, bank guarantees and those things. Other one is on account of some cases that are going on, right? So for the bills and all other cases, there are registers available in system as well. And we can generate, we can ask the branch to generate the report as on 31st of March, that is bill balancing report as well as LC and bank guarantees outstanding report. And we can compare those and have a comparison with what is appearing in GL right now. As far as the other part is concerned, that is other or contingent liability, that can be based on the document and circumstantial evidence is available at that point of time.
I think what we can also do, of course, what Kuntal shared about basically constituent liabilities on account of BGLCs and bills, that is quite right. For say cases like claims against the bank not acknowledge the debt, one of the methods which we have been using, I can suggest that you can look at the legal expenses of the branch and try to look at the cases why legal expenses have been incurred. In certain cases, you can find bills for cases where the bank is a defendant. And then from there on, you can sometimes find out cases of contingent liabilities, which otherwise the bank is not disclosing, of course. And you should definitely take a management representation on the such cases also and keep that in record.
Okay. The next question is, in case of agriculture advances, cash stated to be received and against paid on the same date, whether the same to be accepted as repayment?
Yeah, definitely.
Yeah.
Why not?
Ranjay, you want to reply on that?
Yes, exactly.
It can be.
Okay.
If the documents are available, then you can't deny that, right? I would be saying on a negative side. Can you deny if the documents are available?
You see, what they do is they use the KCC card, you see, and they say we are entitled to 5 lakhs of rupees, I'm paying you off, and then they withdraw it the next day. Or at the same time, there's no issue on that.
Will it not amount to
we need to be careful about something which sometimes what we call generally as paltaki, the entries per se may not be genuine. So that we need to keep in mind. Maybe in some cases we need to verify that proper evidence is available for deposit of cash and also withdrawal of that payment in cash. And especially the payment, when it is withdrawn, it should be supported by some instructions from the borrower. So that we need to keep in mind. That is important. In case the proper evidences are there, then we have to accept. We don't have an option. But if we can find cases, and that should not be one or two cases, you can find a lot of cases where these evidences are not on record, then you may take an appropriate call based upon that.
So will it not amount, Lokesh, that what you people have explained earlier, that if you're taking a loan to satisfy another loan, then the same is going to be NPA? Will not this not cover in that thing?
No, no. Here in this case, what happens is first the cash is deposited to repay the previous loan, and another loan is obtained, because there is one condition in agriculture loan. If there is an existing loan, then the borrower is not entitled for a fresh loan. So I
Right.
think what Lokesh suggested is the best thing you can look into. You may look at the cash records, maybe the cash scrolls, etc. If at all there is a suspicion that these transactions are of nature which is not genuine, then I think you may apply to what Lokesh said. Otherwise, this is, I think, okay, go ahead.
In case of credit summation in account is very low and is only 20% of sale, what to check further and whether the account is an NPA?
See, there is no such NPA norm which talks about credit summation and sales. What you need to verify is that you need to test that account whether there is any inherent weaknesses existent in that account or not. If as an auditor you are convinced that there is an inherent weakness, you can mark that account as NPA. If you are not convinced, take a representation from the branch. If you are convinced with the representation, you can leave that account. If you are not convinced, and if you feel that there is an inherent weakness, you can mark that account as NPA. But no direct correlation is there between credit summation, 20% of sales, and other things. It's nowhere there in the IRAC circular.
No,
I
the
think
thing
we
is,
also need to check. Also need to check basically that sometimes what happens, the low credit submission is because he may be operating a current account, or he may be having a limit with some other bank. So sometimes when we look at the balance sheet, we can see whether there are other current accounts which the that customer is using, and ask for the statements of those current accounts also, which should in any case be there on record of the bank when they are doing a credit assessment, and based upon which you can take a call. Of course, I agree with what Dhananjay ji said, that per se there is no direct correlation between low credit submission and NPA. And only thing what we need, basically are required to check whether it amounts to some kind of a credit weakness in the account, which needs to be explored further, and further evidence needs to be obtained before we can take a call on being account being declared as an NPA account based upon the inherent weakness in the account. But per se, there is no direct correlation between the two.
no, Lokesh, there may be no direct correlation. The issue is, suppose somebody is showing a 5 crore turnover, okay, and he's depositing not even 50 lakhs in a year in his account. So where is this turnover going? How is he utilizing the money? And you see his balance sheet, it may not show a second bank. The issue is that whether these are artificial receipts or real receipts, and he's on the basis of turnover or projected turnover, is getting his limits assessed again. Again, the appraisal situation will come. Here, the issue is, you see, of the 4 ingredients that make up for the verification of an advance account, operations is a very important part also. See, documentation is very important, okay? But operations is no less. So if the operations do not match with the figures he has given and the audited figures that are available, I think this account, one may have to take a very serious view of the account and look into it a lot more in depth to determine whether it is suffering from inherent weakness, which turns it into an NPA. You see, from reason to suspect to reason to believe, that should be the path that one should traverse.
One question I've actually मुझसे miss हो गया था, वो मैं बोल देता हूँ. If lease deed of bank premises is expired during the year and not renewed till date, what is the duty of the auditor?
Lease of bank or ban?
Bank है सर ये.
अच्छा, bank, अच्छा, अच्छा.
टूट गया सर.
branch premises.
Okay.
से typing में से typo.
See, there is no duty of auditor as such. That is the duty of the bankers. If I want to answer this
Yes.
in straight away, the maximum thing is that you need to ensure that the liability is provided for, and in case if any possibility of contingent liability is there, that has to be also disclosed. No other duty of auditor as such, as far as expired lease deeds are concerned.
There was one question of Sachin Jain. He's put in the chat. What will be the validity period of 1 year? Start. Give me a minute. Right. Sorry.
Yeah.
The question is available to you, I believe. attendee, right? If you can, Lokesh, can you read out that Sachin Jain issue?
When will the validity period of 1 year start for renewal of loan after a short renewal? Will it be expiry of original renewal or the date of regular renewal after short review? Let's say after 100 days from the expiry, like that example which he gave. If due date was say 15th of June 2019, and somewhere in December 20th, 15th, they are renewing it. They're renewing it, for a period from 15 December 19 to 15 February to 15 December 2020. So his question is whether it is a prospective period or it should be from the original date when it was due. I think it should be prospective because normally banks do not do, renewal for that overlapping period, which is in default. And actually, that's where Khanna sir also said about, how they were allowed to run it beyond a certain period if the bank policy says that if the limit has to be renewed within a particular date. So I think normally the bank renewal says it is for a prospective period. But I think we should take care of what is bank's policy, what is the ultimate time provided within which a bank should go for a short review or whatever process. Number one. Number two, for NPA also, the out of order concept talks about, continuously hold on account. If the limit is for a particular period, naturally the limit is expired on a particular date. And if you continue for maybe just below 180 days to identify it, I think it overdraws beyond 90 days period is also something which you can trigger. Again, point to ponder over.
No. I think it's very clear. The policy says once a year you renew it.
Yes.
Okay? But you're allowed a short review.
Yeah.
That's only an interim measure. The
Yeah.
issue is, will you renew the account twice in 36 months or will you do it twice in 2 years?
Correct.
Okay, that is the issue. And it goes against the policy. But here the issue for the auditor would be, is the infraction of the bank's internal policy an infraction of the law? Or does it impact the NPA? So I think it can only go into the LFAR because there is no infraction of law insofar as the operation may be concerned or documentation is concerned. Suppose everything is okay. Otherwise, so the auditor will only have to bring it out in the LFAR. That the system followed by the bank is virtually it is renewing. Instead of every year, they are doing it once in 18 months. That's the impact of it. So the idea is to discipline them more than anything else.
Okay. What I request, since we want to close this session, what can I request to all the panelists, if they can closing remark within a minute, if it is possible, or some word of caution could be given to all the future auditors and present auditors of bank branches and other people, right? Word of caution from each. Let me start from Niranjan, right?
My request to you all would be, don't treat it as an annual ritual. Every year we have a Diwali in October, November, New Year on 1st, we get bank audit every year. Mind it that the business complexities also have given a lot of responsibilities. Further expectation from auditors have increased substantially over a period of last 5 years. So I think best exercise professional competencies. Try to take best clues from such sessions. Update your skills, update your knowledge, and all the best for the bank audit exercise.
Niranjan?
Yeah, I said that. I only said that.
Okay, Dhananjay ji, yes.
Yeah, I will just continue from where Niranjan left. As you rightly said, we have to have enhanced knowledge. I will just add a couple of points. First thing is that all of us are doing statutory bank branch audit, so behave as an auditor and not as a representative of the bankers to be in a little bitter way. I will just add one point about COVID-19 circular, and I will pass on further things to Lokesh also. See, COVID-19 circular, I will again reiterate the two case laws which are going on. So as an auditor, for the first time, you can be always with the bankers, wherein the bankers are saying that the installment due on 1st of January, if it is not paid, we are going to mark that account as NPA. So you can agree with the bankers at least on this point. Leave aside the other disagreements about the NPAs. And just one point is that as far as divergences are concerned, RBI is becoming serious about that. They are on a different track now. You can see a AASB website also, wherein RBI has sent a letter to CA Institute, which has been already published, wherein the divergences, the reasons have been cited. Just go through that and be an alert auditor, and ensure that you are having good planning done and sufficient manpower is available so that you can complete the audit within the time which is available to you. Don't be under any pressure that because of COVID-19 you have to wrap up the audit in 1 or 2 days. There is a sufficient time which will be anyway available, because it's not in our hands to shorten the time period. The time period remains same. So happy auditing to all of you, and thanks for being here.
Lokesh,
I'll only add one thing. There was a question which was left regarding UDIN. So I think by closing, I'll say only that what I understand, and this is from the FAQ provided on the UDIN website, that you have to generate one UDIN for all the main audit report and the certificate which you are signing. So only one UDIN would suffice for that, and maybe another UDIN would be required for the tax audit in case you are doing the tax audit also. So basically, in case you are doing a tax audit, 2 UDINs would be required. And in case you are only doing the main branch statutory audit, then only one UDIN would suffice for all the certifications. And the only thing which Dhananjay said, I'll add on to it that, see, of course, time would always be a limitation in any audit, not only in bank audit, other audits also. The only thing which we need to do is we need to plan properly, and we need to train our staff also. So sometimes what happens is we get trained, and when we go for the audit, we are as good as our team is. So we need to train our team also before we go for the audit, and ensure that they are aware of exactly what they need to do, so that there is no failures on the that we know a lot of things, we want to do a lot of things, but because of the lack of training on the part of the team, we actually are not able to perform our duties appropriately. Thank you so much.
Kuntal, can I have a word? Can we have a word?
Yeah, I'll just sum up in that way that we have now an extended lockout time. Let's invest into it and just refresh our entire review processes and circulars. We can prepare a list or a checklist. Khanna sir has rightly stated that there are a few checklists that we can prepare based on the guidelines. I will only say that recalibrate your audit processes and do not rely 100% on the systems, because systems are also made by human and works on a GIGO principle, garbage in, garbage out. So please also review it from a different perspective as well. And happy auditing. Khanna sir, thanks a lot for joining in as a panelist.
It was my privilege.
Khanna sir, give a minute or two from you.
Yes, sir. I'll try and do whatever I can in this very short time. You see, what constructs the auditor at the branch level? Each time he asks for information on any matter, they say, sir, we don't know, this is system driven. So every answer that the bank doesn't want to give to the auditor, he says, this is system driven information, we don't know. Why have you charged 9% system driven? Why is this particular thing done system driven? Now the answer to that, you see, is only one. See, at the branch level, you cannot know whether all the parameterization required for the purpose of the software has been done, because we have ourselves seen, as the head office auditors in one of the banks, that they said we've done it, but when we went into it, it was not done. So the results of correct parameterization are far too different from what the bank may have done. Bank may not try to. A system must be proper. Then it must be implemented properly. Here, the bank will tell you all our parameters are in place. We have confirmed from the head office. How is that a good bit of evidence or satisfaction for the branch auditor? I feel, and this is my honest opinion, that the auditor must disclaim his responsibility with regard to the parameterization done at the head office, to which he has no access, because he is placing reliance on system-driven information for which he does not have original evidence. And therefore, in fact, I have recommended for years together in the audit program we prepare and give out to the participants, and this is regarding the information system or the EDP audit, that not being aware of the parameterization, I am relying on the assumption that all the parameters are in place. And because I do not have the original evidence, I am placing my reliance on this. And I think this disclaimer in the reports, in every audit report, is a must at the branch. And I think this will save us, God forbid, there is any system-driven information which is proven wrong. Because this is the accounting system of the bank today. The transaction originates in Chennai, lands up in Delhi. So how do I know? I don't have the original vouchers. I don't have any evidence. So the first issue is to satisfy at the branch level about the parameterization, about which only a query can be made, and the branch will at best satisfy you that it is done. Now, on the assumption that the parameterization is okay, I come to a second issue. All right, then what are the exception reports given? I cannot just ignore the exception reports at any branch while doing the audit, because the system says we have to do this, and if the amount is overdrawn, we have to report it. So go by the exception report, presuming that the parameters are fitted in. So those exception reports will tell you two things, one on the system and one on the transactions. So you can raise any query. If you're raising a query on the system and you're getting the answers for the purpose of your report, then you might as well look into all the types of exceptions. The other important part is exception reports which are generated are sometimes intermittently generated and not done on a daily basis. The real system of the bank is the daily exception report must come. It's got to be cleared by the manager by the evening. And he has to deal with all of those, both as regards system and the transactions. So this cannot be ignored. I'll just touch on that COVID for 1 minute, if I may be permitted. You see, the people who have read the RBI circular very carefully, I don't think if they understand it properly, they will ever go for a moratorium, because it is adversely impacting the people who will opt for it. The option is only in the hands of the borrower, not in the hands of the bank. Now, what Dhananjay said was that the banks across the board have said everybody is entitled to it. I don't think so, for the reason that there are conditions to be satisfied before you can avail of the benefit, if at all. And one of the conditions is this, that he's got to opt. So there's got to be an eligible borrower. So you have to first determine whether the borrower is eligible. Is he impacted by COVID? His cash flows are impacted? Is having losses? Okay. Is he a standard account on the 1st of March? Now the issue is, if the account is standard on 1st March, okay, and on 31st March it becomes NPA, then what happens? What kind of entries are to be passed? So the interest is accrued, all right, but it is not to be there in the books. I'm giving you an example, a real example. An asset becomes non-performing due to non-financial or non-monetary reasons. That is not covered anywhere. So if the account has become NPA on 31st March because the stock statements have not come, and the account becomes NPA, it may be standard on the 1st of March, but on 31st March it is NPA. So the only advantage he will get is he will not be called upon to pay in March. But in April, the whole default has got to be cleared. He's got to give the stock audit reports, some stock reports. The moment he does that, account becomes a performing asset. This entry, which is outside the books, will have to be brought in as interest accrued, but not due. And one final point on the relating to the interest accrued but not due is this. Though Dhananjay mentioned about this issue, the interest accrued but not due is not part of the advances portfolio. There's a mistake the banks will make this year. Even if you have debited a party for the month of March and he's made an option that he wants to get into the moratorium, this will have to be culled out from the account and shown as part of the other assets in the second column in Schedule 11. And that talks of interest accrued. If you refer to the circular of 6th of February 1992, it is very clear that interest accrued and not due on investments and advances is to be shown under that subhead. So the advances are to be net of the interest, which is under moratorium. As simple as that. I think there's much more to say, but I feel that in this short period of time, we can cover the only other aspect, last aspect that I will touch upon is the reporting aspect of COVID. What kind of a note should come in the accounts of the bank and what kind of matters should be reported in the auditor's report is not yet very clear. I think ICI should take up this issue and guide all the members.
So thanks a lot to all of you. I just want to personally thank Dhananjay ji, Niranjan ji, Kuntal ji, Lokesh, my friend and Khanna sir. Sir, it's basically इससे better panel नहीं हो सकता. और I've got some 7 to 8 messages that इतनी clarity से कोई seminar ना webinar हुआ ना आज तक कोई seminar हुआ. It is not my words. These are the words of a few participants who have given it to me. So there could be a possibility since Modi Saab has already said कि अब 3 मई तक कोविड की छुट्टियां रहेंगी, तो mostly there could be a possibility we will have another seminar on specific issues which not touched upon over here. Or let me thank personally to Lokesh. All this program has been made successful only by Lokesh because I don't मैं इन बड़े-बड़े लोगों को जानता नहीं था apart from Kuntal. और so yes, Khanna Saab is already been.
Lokesh is a very big man.
Sir, no, sir. He is not a big man, but उसके हाथ लंबे हैं. He's a good friend.
Don't discount my good friend.
नहीं, I know Kuntal sir. मैं आपको भी अच्छी तरह जानता हूँ. मैं धनंजय जी और निरंजन जी को नहीं जानता, लेकिन इसके बावजूद they have given such a valuable time to us. और it's a wonderful experience, I believe. और ये हम जल्दी कल तक मैक्सिमम YouTube पे डाल देंगे. एक छोटा सा एक अनाउंसमेंट करना, उसके बाद आई वांट टू क्लोज द थिंग्स. सर, हम कल से जीएसटी का एक एडवांस लेवल पे कोर्स शुरू कर रहे हैं. इट इज ऑन वेबिनार ओनली. वी हैव टॉक टू अशोक बत्रा जी, वी हैव टॉक टू हिरगंगे साहब, वी हैव टॉक टू आशीष अग्रवाल, वी टॉक टू जस्टिस क्रिस्टोफर. यू नेम अ बिग स्पीकर, इट इज ऑलरेडी बीन आवर पैनल. तो ऑलरेडी हमने 12 दिन का कोर्स ऑलरेडी लॉन्च कर दिया. आज मतलब आपके बाद हम ये भी लॉन्च ही कर रहे हैं. वी आर गोइंग टू स्टार्ट इट. तो आप में से कोई भी, आपकी टीम में से कोई भी जो जीएसटी देखना चाहता हो और पढ़ना चाहता हो, इट इज नॉट गोइंग बेसिक लेवल. जैसे आज जो हमने पढ़ाया, दैट इज, आई बिलीव इट इज नॉट बेसिक लेवल, इट इज एडवांस लेवल. द सेम वे मैं आप लोगों की दोबारा हेल्प से एक और कोर्स करेंगे, एक और क्लास कर लेंगे हम जब 27-28 के आसपास, जो फिर अगेन एडवांस लेवल होगा. द सेम वे वी आर डूइंग फॉर जीएसटी. एंड थैंक्स अ लॉट, वेरी वेरी सिंसियर थैंक्स फ्रॉम द कोर ऑफ माय हार्ट फॉर doing this program in such a wonderful manner, successful manner. Thanks a lot.
Within just one last thing, can you send me the address at which I can mail, because some participants had asked for that little chart.
Yes, sir. I will SMS my WhatsApp my.
Send me the address and I'll just.
And one more request. So one more request I want to do to all the panelists. सर, कुछ handy कुछ ऐसा हो जो लोग पढ़ सके. बाद में जब हम 28-29 को कोई सेमिनार कर पाएंगे, जैसे आप अभी कुंतल ने बहुत अच्छा बोला कि आप अपनी चीजें तैयार कर लो, प्रोग्राम तैयार कर लो, so that they can, when they read those things, they can ask, those people could ask question from you कि सर इसको कैसे करना है, आपने ये लिखा है, इसको और कैसे चेक करना है. that will be better off. तो वो अगर आप मुझसे शेयर कर लेंगे और मैं सबको भेज दूंगा, तो nothing like it.
Okay.
With these words, thanks a lot, sir. Thank you.
Thank you.
Thank you so much. Thank you so much.
Ranjay, bye.
Yeah.
Bye, Lokesh.